esteemed and erudite resource persons of this 2 days program, CA Rachana, CA Samit, CA Dr. Paul Jayekar, and my good friend CA Deephika, my colleague in this regional council, and Secretary of SACA Panaraj sir, participants of this excellent program. Very good evening to all of you. On behalf of Internal Audit Standard Board of ICAI and Southern India Regional Council of ICAI, I welcome all the speakers and each one of the participants for this an enlightening and encouraging learning session in this pleasant evening. In our professional services, whether we are in practice or in industry, the role of internal audit assumes greater significance as a crucial part of an entity. Corporate governance lies in the effectiveness of internal audit functions. In recent years, the importance of good corporate governance has received significant public and regulatory attention. It is therefore imperative that we keep ourselves abreast on the various phases of internal audit functions. It is in this context, I thank the IASB for conceptualizing the subject of internal audit and structuring the program, embedding diverse and significant areas connected with the internal audit. We have seasoned and effective speakers to throw more light on the various fields of activities in internal audit in these 2 days conclave. I am therefore confident that this conclave would bring the focus the silent features of internal audit functions. I am quite sure the participants would take full advantage of their presence as the deliberations would generate fruitful value addition and insight on the internal audit functions. The first topic to be presented by CA Rachana on risk-based internal audit is primarily an area of focus on the inherent risk involved in the activities or system and provides assurance that risk is being managed effectively by the management within the parameters defined risk level. The penultimate session of today is yet another interesting topic of discussion on internal audit of HR function. That would be piloted by our CA Samit, whose presentation would give us a bird's eye view of the role of internal auditors in HR functions and the resultant input by them to identify the strength and weakness in the HR functions as well. The solutions to ensure compliance in tune with the organization's goal and objectives, thereby improving the performance of its HR activities. Wrapping up today's session would be on data analytics, adding value to internal audit, another key area of internal audit functions. We have with us Dr. Paul Jayekar and CA Deephika to offer us an expensive exposure how the concept of data analytics add value, enable the internal audit functions to do more with less data while increasing the quality, efficiency, and effectiveness. I am sure would have generated interest in you to know what is the store for you to add value. Dear members, our chairman of Internal Audit Standard Board of ICAI, Nanda will join after this first technical session and will give keynote address to the viewers for this excellent program. With this, I request the Secretary of SARC, CA Panaraj, to introduce the speakers of today's program. Thank you so much.
Thank you very much, Chairman, for setting the tone for the day. And I welcome once again all the speakers, these distinguished participants in this program. I take this pleasure of introducing the first speaker for the day on risk-based internal audit, Madam Rachana Daftary. She is a chartered accountant and has over 16 years of experience in risk-based internal audits, risk assessments, forensic and business consulting. internal control assessments and internal financial controls, SOX, due diligence, etc. She has worked on a large portfolio of clients in various sectors ranging from stock exchanges, stockbroking, real estate, quick service restaurants, projects, manufacturing, multi-level marketing, trusts, wines, pharma, etc. Prior to joining Measures, she worked with Mahajan Ivara AJ Shah, now CNK. And her professional experience, risk-based internal audit, has led and undertaken risk-based internal audit audits covering all major areas such as procure to pay, order to cash, record to report, hire to retire, sales and marketing governance, etc. IFC, ICFR, Sarbanes-Oxley Act, SOX comprises standard operating procedures area. She has led and undertaken IFC designing and testing of all business processes of pharma, food, and etc. Mystery shopping, forensic audit investigation, pre-assessment and grant utilization audits, risk assessments, and others. And she leads the concurrent audit of treasury function for a big core investment company also. With this brief introduction, I once again invite you to this conclave, madam. Chairman, shall I introduce all the speakers?
Yes, sir. That is better. You can introduce.
I take the pleasure of introducing CA Samit Saraf, sir. Good evening. Internal audit of HR function is the topic which he deals for the day. Mr. Samit is a fellow chartered accountant with 8 years post-qualification experience. He manages the internal audit practice of for the Mumbai office of his firm, and he has previously been part of Young Members Empowerment Committee of WIRC of ICAI for 17-18 and has been active core group member of the BCAs, that is Bangalore Bombay Chartered Accountants Society, for past 5 years. He has contributed to the illustrious BCAS referencer for past 3 years under accounting and auditing module. With this, I introduce Samit, and he also holds an advanced diploma in management accounting from Chartered Institute of Management Accountants, London. I take the pleasure of introducing my teacher and teacher to many. I am a senior citizen and he was my teacher in 85. You can just imagine what is the amount of experience he has. Session 3 has, that is his topic is data analytics, adding value to internal audit. Chartered accountant and Dr. K. Paul Jayekar. He is a director in IT and RMS, Mrs. CNK and Associates LLP, and independent director Panasonic Carbon India Limited. Past employments, he has various assignments. I think I'll just read out briefly only headlines of these things. He was director in various companies and he was consultant in E&Y, IS Security Division, and he was consultant for Royal Soft, CTO, Royal Services, like this. So many big organizations, and his work experience is his domain experience is systems analysis and design, RBIA, BPR, ERP remediation, consultancy, and various big organizations, and also he has overseas assignments at USA, Malaysia, Sri Lanka, and teaching experience. I told you I am the example for his teaching experience, and where he has even taught not only at the institute but also at various institutions like University of Madras and IIT Madras and Meenakshi College for Women, Nitte University from 89 to 82, and various other IFMR Madras, Institute of Chartered Accountants, OTL Academy, and also he has presented papers, various papers, Institute of Chartered Accountants of India, All India, Regional and CPMA seminars, ISACA Regional Seminars, SIRC Study Circles, University of Madras, etc. His professional membership is Institute of Chartered Accountants of India, fellow member, ICAI, Institute of Internal Auditors, Board of Governors, and past president, Madras chapter. Very happy to invite you, sir, for the day's deliberations. And I take the pleasure of introducing CA Deephika, who is a BCom graduate, Associate Chartered Accountant, and PG BABI, CCRA, and LIE. Data analytics and adding value to internal audit is the topic she is covering. Welcome, madam. And she has she has the experience of handling the assignments involving audit analytics, exception reporting, application review, ERP remediation, information technology, general controls, internal financial controls for banks, NBFCs, and manufacturing companies. She held various positions, special invitee to Digital Accounting and Assurance Committee of SIRC of ICAI, and Joint Secretary Women's Committee of the Institute of Internal Auditors Madras chapter, faculty with SIRC of ICAI, guest lecturer at various institutions. Her work experience also, she handled the audits in areas of analytics, systems, process controls, risks for large manufacturing, banking, and financial services companies, successfully handled assignments in internal audits. Financial controls and ITGC for banks, discom manufacturing companies, information technology companies, and clubs. Handling ERM, the enterprise risk management assignments for manufacturing and KPOs. With this, I move on to the introduction of CA Sivaram Subramoniam, sir. He will be speaking on internal audit learnings and mythology. Sivaram is currently working as Chief Audit Executive at Titan Company Limited, a Tata flagship company. He has 28 plus years of internal audit experience in both consulting and industry. He has worked across the wide spectrum of corporates covering MNCs, American, European, Asian, Indian conglomerates, listed companies, as well as promoter-driven organizations. His industry domain experience ranges from infrastructure, manufacturing, aviation, telecom to consumer durables, FMGC, retail hospitality, etc. His work domain accomplishes several aspects such as audit, compliance, SOX, ERM, COSO 2013, Ethics Committee, Whistleblower Program. In his various roles, he has led several corporate governance agenda and has been an integral part of several cross-functional teams on various large-scale transformation and strategic projects. His team was awarded IIA Award in 2019 for best use of technology for automated analytics and continuous auditing. Very happy to have you amidst us today, sir.
Sir, Sir Banaraj, sir, we will start, sir. Tomorrow he will speak.
Okay, he is speaking tomorrow.
Yeah, speak. Yeah, tomorrow. We'll speak.
Okay, so
we'll
then
speak tomorrow.
Okay.
Yeah.
Thank you. I could not see that.
Yeah, Madam Rachana, you can start, Madam. You can proceed.
Yes. What
Thank you. Thank you.
So good evening, everyone, and I'm very glad to see that there are almost 500 participants. It's also very overwhelming to see that. And I want to thank IASB and SIRC to give me this opportunity. I have been a career internal auditor, and there has been not a single day when I felt internal audit was not my field. So, when I started off on the internal audit journey, it was a very different thing than what it is today. So we'll take you through some of the basics. The contents today would be the introduction to what risk-based internal audit is, what is the regulatory framework, what the approach should be, what is the audit universe, and lastly, what would be the key takeaways. Now, I see that we're almost at 5:16, 17. I would probably be speaking up to 5:45 or so and leave about 15 minutes for question answer, because I'm here not only to impart my practical knowledge, but to learn as well. So I'm happy to take up any of the questions in the last 15 minutes. So what is internal audit? I'll just take you through the definition. It's a continuous critical appraisal of the functioning of an entity. The main focus now is to suggest improvements, to add value, to strengthen the overall governance mechanism, to ensure that there is some sort of risk management and there is an internal controls system. Now, what is risk? Risk is basically it's a multiplication of impact and probability. Impact is what impact would it have, either financially, reputationally. It could be that it could be any sort of an impact which is not in line with the vision mission of the company. And what is the probability? Is it really high or is it low? Now, why are both important? I mean, we all know in the last 15 months or so that we've gone through COVID-19. Now, no one was foreseeing this as too much of a risk because the probability of occurrence was very low. This has really changed our perspective of looking at risk a little more differently, and that brings in more focus to look at why internal audit should be risk based and not otherwise. So what are the emerging risks? So Institute of Internal Auditors had come up with a list of what should be the 2021 emerging risks that we all should be looking at. I mean, we all know what is the cyber and the data security. We've come across, sorry. There's a cyber, insurance agent, AXA. It was AXA hit by a ransomware after saying it would stop covering the ransom payments. Now that makes it super important. What is the regulatory, change in compliance that we're looking at? We're looking at things like some simple things like, we've had the IT Act, which has come in, and there's so much of backlash on the social media. And as we speak, there are so many regulatory changes which keep coming, not only domestically, but internationally. Now we have digitalization. We've all been working from home for the major part in the last 15 months. And whether it is for work or for entertainment or for any other reason, digitalization is our way. But with digitalization and new technology, artificial intelligence, we have so many other issues that will happen in terms of data privacy breaches, etc. The other thing that we look at is the human capital and talent management. Now, in some sectors, we see that the human capital is in shortfall, while there is some industries where human capital is in abundance. Now, that is a very important element to look at. There is talent management. We're all working from home. We've all seen breakdowns, frustrations. How do we manage the talent and how do we take it forward? That's a very important risk that we have. Then there's the disaster response and crisis management. We've had the cyclone, which has just come in, and there was a crisis that happened. And how did we respond to the disaster? There could be various companies which would have specific implications. You could have the power companies, you could have anyone, related to the agricultural, kind of business. They would have a lot of impact with such kind of events that would be happening. We have the macroeconomic and geopolitical uncertainty. Ours is a country which is full of this, whether it's an NRC or the Kashmir issue. Then we have so much of outsourcing that we do, within the companies. Now, a typical example could be that, we have a ERP, and then the ERP, now most of them are saving the data on a cloud. So the company would have signed the agreement with the ERP vendor, but the vendor would have outsourced the data management and infrastructure to another person. Now that's the nth party. Now we don't know where the company's data is finally residing. We need to think through all of this, because in the digital world, you don't know who's the end party who's getting your data and how is it viewed. You have the corporate governance and the reporting. We've all seen the yes banks and the Satyams and all of those, the cases which have been coming up and just adding up in the last so many years, whether the Nirav Modi case is there. So corporate governance becomes another very important issue. We have corporate, the communications management, reputation. With the social media world that we're we're living in, reputation can be created and can be destroyed as within a minute with the trolling, etc. that happens. So these are some of the emerging risks that we should be looking at. What is risk-based internal audit? So it's primarily focused on what is inherent risk. And inherent risk is something which is, in a very raw form. It is not action. It's something that is there. And then what is risk-based internal audit doing? It's giving an assurance that it is managed or it is well within the risk appetite. What is risk appetite? Is basically you have the appetite, or you can live with this risk. A simple thing could be all the gaming apps which have come up, like, we all, probably put 49 200 rupees and we're okay with losing that money. That's basically our risk appetite. We either make 100 rupees or we just lose the 50 rupees. That's our risk appetite to live with. Let's see what the internal audit has been then and now. When it started, it was more like, it's a cyclical, routine, transaction driven audit focused on financials. It moved to a more little bit of risk assurance, as we moved forward. Then it was moving towards risk management, effectiveness of risk management. As we speak today, it's more like moving to the digital, use of technology, like Mr. Paul Jayekar is going to speak about it today in the last session. It's all moving towards technology, and that's a number one requirement for how we look at internal audit today. And what's the evolution of internal audit service like? So the internal audit service in the 1960s to 1990s was more, compliance focused. So you have the standard operating procedures, or you have, some regulatory framework, and you focus on that. The aim was just to detect, any sort of mistakes that were there. Then it moved to more system based, like you try to improve the internal audit, internal control systems. That is from 1980s to 1990s. 1990s to 2010, it was more operational, and you look at, how you improve the business controls. 2010 to 2020, early that, it was more integrated, a partnership between the internal auditors and, the entity. We are looking at more improving the business, units performance. And as we speak today, it's everyone's demanding, tell us what is the value add. It needs to be a value add driven thing. So that's how our service offering needs to change, and that's how we need to evolve. Now let's see the regulatory landscape. Now we have the Companies Act 2013, the section 134, where the board of directors need to mention whether there are internal control systems, and whether there's a risk management system. We have section 177 read with the listing disclosure agreement of SEBI, which talks about the audit committee's responsibility for commenting on internal audit. We have section 138, which is worked in our favor, mandating internal audit for listed companies. Then some criteria for unlisted and private companies, where which is based on turnover, the share capital, or the loans that they have taken. We have the CARO 2020, where the statutory auditors will need to comment on the internal audit systems as a whole. Then you have specific things like the RBI mandates for banks, NBFCs, where they talk specifically about risk-based internal audits. These are some of the statutes with overall basis where this is, So what is risk-based internal audit? Like you have the risks and the control. So what is the, relationship? So you have the inherent risk, like we said, which is more focused on what is the raw risk. It's not addressed. Then you have the controls, and then you have the residual risk. So what is the controls? Now, either you accept that, okay, this is within my risk appetite. So a typical example of accepting the risk is that, if there is a contract and if there's a late delivery charge, I think I would be charged maximum 5% of the contract value. Okay, I think I have the risk appetite to do it, so I can accept it. I reduce the risk, so when you do customer due diligences or you do the vendor visits, you're trying to reduce your risk. You're taking advances from your customers. That is also a risk reduction methodology. You transfer the risk. So you either take an insurance policy, or you create a back-to-back liability on your contractor. That's a transfer example. You avoid, you just do not go to some of the geographies. You don't want to enter them because it's just too risky. It doesn't fit within the risk appetite that you have. So this is the, this is the relationship between the risk and the controls. Now, what are the control characteristics? So you have the preventive controls, you have the detective controls, you have directive controls, compensating, manual, IT dependent, and automated. Now, preventive is basically you just prevent doing something, by putting some controls, like you have a prior approval. So you have the, CFO signing checks all, all payments above 10 lakhs. It's a preventive control. You have a detective control, it's it's not there in the system, but you have probably preventive controls, but you also have detective controls to ensure that if there is an error and it's not picked up, it will be picked up at a later point, like a bank reconciliation statement. You have a directive control. You tell the employees exactly what they're supposed to do. You have a training program. That's exactly what you want to, as a desirable behavior. You have a compensating control that, you basically, if you don't have a control, you have something which is manually put in place to ensure that it's compensated. You have a manual control. It's not in the system. It's outside. You do suppose a debtor analysis. You have an IT dependent control, which is that, the data will be taken from the system, but it will be, then reviewed. So something like the variance reports that you generate from the system. Automated is it's embedded into the system. Say, for example, like a three-way check. Now there could be, for the same risk, you could have multiple controls. Now, what would you, actually use, or, what would be you place reliance on? So automated controls should be preferred over manual. Preventive controls should be preferred over detective controls. Monitoring controls should be preferred over transaction controls, and controls which are clearly documented, not just like, someone's telling you. That's how you would, test a risk and the controls against that. So what are the advantages of a risk-based internal audit? The risk responses should be just adequate. So, if someone says that I see a potential revenue loss of 50 lakhs, but, the cost of control is suppose 40-50 lakhs. Now, is the control necessary then? So you need to be a little focused, and, you need to see if the recommendation that you're giving, it's not so expensive. There's a focus that, you look at something which is material. You don't look at the very smaller, insignificant items. The risk responses are classified, they're classified into high, moderate, low. They're classified into strategic, operational, reporting list, and then they're reported correctly. Then there is residual risk. So, all risk doesn't need to be addressed. So the companies have certain residual risk. It is identified and it is documented correctly. That at least needs to be done. That's the advantage of doing a risk-based internal audit. Now you track the actions which are taken. So once you recommend that there are gaps, there is an action taken report that you need to do. You need to see if whatever reports that you have given, there are so many times when people give recommendations, they accept it, but they never put systems in place. This helps in tracking whether the actions have been taken. Now there is effectiveness of the improvisation also, whether there was effective improvement. So, you had a gap, and whether there was an effective improvement, you can measure that by doing a risk-based internal audit. So what is the there's an 8-phase approach for internal audit. So first you do, you get to know the company, then you see just one second. What are you understand the risks which the company has. How are these risks managed? You develop an audit strategy, you produce an internal audit plan, then you deliver the engagements, you give an annual opinion, and you do a continuous review. So it's a cyclical thing, and risk is at the fore of this. Now we, in the very start, I said we've evolved, and now we're moving to the digital audit. We call it the smart and digital audit. Now, why is it called smart? Is that S stands for a sectoral insight. So, you need to understand where your company stands. You need to understand what is the management review mechanism, which is, are they leveraging analytics? Is it aligned to the regulatory requirements, and do they embrace technology? So it's basically a 360-degree review, and you basically ensure that you have all subject matter experts with you to look at this, right from getting a forensic person, or you having an analytical person, you have a compliance in charge, who tells you about this. So it's basically looking at internal audit today as a smart and digital internal audit with a 360-degree review that you do. What is a detailed internal audit approach is that, you have something like setting the tone, where you do a kickoff meeting, you explain what you want, you understand what you have the voice of the stakeholders, you give out an initial requirement list, you set the calendar, then you do the actual audit, where there are walkthroughs, analytics, you come up with the gaps, you test the samples, you do a root cause analysis, you discuss, then you update the observation listing, then you do the reporting. first to the management, to the process owners, get their buy-in, get the responses. Then you go to the top management and do a final review. And of course, there is follow-up where you say that, you look at the implementation plan and you keep updating on that. Now, what is a risk categorization? You have the strategic risk, operational risk, compliance, and reporting. Now, strategy is basically, first we used to always look at more of reporting and compliance. And when I'm talking about reporting, there was something which is more in terms of just reporting, financial reporting. Here, when we're talking about reporting could be more, encompassing. If you have to report to SEBI, it's not financial reporting, it's reporting. If you have to give some reports to GST, it's again reporting. So now, what is a strategy related risk? If you want, should you, go venture and do a new product development? Is there enough research and development? What is your return on investment? What is going to be a market strategy to enter a market? What is going to be a pricing strategy for different markets? These are all strategic related risks. What is an operational related risk? Could be that, what is your user experience supposed to be? Like, if you have a restaurant or a shop, now, what do you want as, the customer satisfaction to be? That's a user experience. How are you going to manage the cash flows where, you have to pay the vendors and, to recover the money from the customers? It's going to take some time. You have the technology and infrastructure. There are a lot of companies where, if it's an online sales that they have and their maximum traffic is from night 8 to 12. Now, do they have the infrastructure to ensure that it doesn't crash if they have so much of traffic which is flowing in? What's the compliance related risk? You could have the data privacy. You have new statutes like the labor code which may come in. What is their readiness for that? You could have tax non-compliances. So these are the broad categorization on risk. Now, ratings within the observations could be, this is one parameter that we have. You could have something which is more granular and the wordings could also differ. So you could have high, moderate, low, and you could put parameters like, what does it have as a potential impact on the profit and loss? Now, this impact amount or the percentage should be arrived at with the management, determining what is their risk appetite, and you put those values over there. It's generally a percentage of the turnover or the profit or the, net assets. Then you have the legal and regulatory frameworks. If there's penal prosecution implications, how do you view it and which bucket do you categorize it in? Then you have the fraud vulnerability. Is there a probability of fraud happening? Then you have a policy decision. So, if you have some particular issue and it does not have a policy documented, or the policy documented but with significant gaps, it would be a policy definition issue. Then you have compliance to policy. You have a policy, you have a directive, but the employees are not following it. It's a non-compliance to the policy. You have systems and tools. So you have a particular system, something like, we have this, the MCS come up with a requirement that, all the companies need to have ERPs which show audit log. Now, if your ERP is not equipped to generate the log, it's a system deficiency. Then you have the reputational impact, any impact on the reputation. A lot of companies have zero tolerance to that. That's a number one issue. So this is an overall rating categorization that we have. What could be the root cause? Understanding the root cause is very important. So why did this actually happen? And there could be 4 categorizations of that. It could be because of a process failure. It could be because that people are not, adhering to the laid down processes. It could be inherent limitation within the IT system, or it's a best practice, something like if I have a company which says that I do BRS or the bank reconciliation manually, instead of uploading the BRS into the ERP and generating the results from the system, where it can automatically do it, putting the unique fields, then it's a best practice that we can recommend. So the manual system is working fine. It's just that it could be more efficient if you can do it through the systems. So this is a typical, when you do an internal audit and you do the reporting, these are the basic fields. Why are we bringing these fields is when you're doing the internal audit, you need to think about it and see risk is the number one issue. So if you have an observation and if you don't have a risk impact, actually there is no observation. So how you draft your observation, you have the header, then you have what is the observation, what is the risk impact within that, what was the root cause, basically why did this happen, and what is the recommendation for improvement. Now the last bit or the column is super important because management response is important. Their acceptance of what we're trying to say. what are the timelines and responsibility within which they are going to adhere to this, and whether we are satisfied with their comments. There are a lot of times when we get management responses which are not satisfactory. So, and we need to put a tab in terms of what is the root cause, like we spoke about process or IT or people issue. So what is the root cause? And then whether it is a very important observation, high, moderate or low, we need to just put these things across. So that's something on how an observation needs to be presented. Now, coming on to audit universe. So what is an audit universe? Basically, an audit universe, it comprises of all the areas which need to be audited, the operations, the units, and it needs to be reviewed periodically. It's like a library of all the audit areas. And, this also changes depending upon what the scope the client gives you. Okay. So now what is important? Why is audit universe? When you're preparing an audit universe, you need to see what is the objective. So what is the size? It's not like one size fits all. You have to customize the audit universe depending on what type of and the size of the company is. What are the structures? So is it professionally driven? Is it a family owned business? What is the culture? For them, is ethics, etc. super important. Then culture also plays a very important role. How complex it is it a trading entity or it's a multi-service entity? Is it a new age company? All the complexities matter a lot. What is the criteria? So maturity, so how old is the company, how progressive it is, what are their priorities? Do they have compliance as a priority? Do they have operations as a priority? What is the regulatory framework they are in? Like, a bank or NBFC would be in such a different regulatory framework as compared to like a quick service restaurant. A quick service restaurant would have, the food, the the FDN, I mean, the FSSAI norms, you would have the legal metrology, all those kind of acts which are important. For a real estate company, it would be RERA, which would be very important, GST, which would be very important. So these regulatory frameworks in which each of these companies function would be very important to look at. What is the risk appetite? What is the risk taking ability? Is it like they have very little tolerance or they have quite some tolerance? That also changes. So someone may say that I'm okay, why is this area so important? I have the risk appetite for it. So your audit universe would change based on that, and the rating within the audit universe would change. So how do you arrive at the audit universe is that, you take all the processes, list them down. Then you have the rating, which will be given basis your discussion with the company and the rating criteria that you have given. You would have number of areas defined, which is a mixture of processes and theme based. You would have areas which are shortlisted, repeated every year based on risk assessment. There would be some areas like order to cash or procure to pay for a manufacturing company, which would be very important and they need to be repeated every year. And then generally you spread the internal audit plan for 3 to 5 years. So these are broad guidelines. It could be revamped, re-looked at in a lot of ways. Now, this is just a broad structure showing how an audit universe could look at. You have the audit area, you have the process, you have the rating, you have the years in which each of these areas would be taken up. So what are some of the basics that we need to take into consideration when we're doing the audit universe? We need to look at the industry in which they're functioning. Like we said, if it's a real estate company or it's a power company or it's a NBFC, it'll completely change how we look at things. What are the emerging risks for them? So if it's a technology company or it's a social media company, their emerging risks are so different from that of a manufacturing company. What's the control environment? It's a software aspect. Next slide talks about control environment, where I'll take 2 minutes. What are the expectations of the management? Now, if they are expecting value add, okay, and you're trying to sell controls to a great extent, it's not going to match. And they're going to be very, it's not going to be a win-win situation. So it can't be a one-way traffic. It has to be as aligned with the management as well, with the audit committee. What are the recent developments? Have they taken over somewhere? Have they become global? Was there a fraud which happened within the company? Was there, a very big investment that they have done? You have to look at quantitative and qualitative parameters. So it's not just value based, but software aspects, like you could have related party transactions. You need to strike a balance. You can't overdo, like, you get this feeling from a lot of people where they say, oh, The internal auditors are back. You need to strike a balance. You can't be doing everything in year one. You need to spread it and you need to balance it out as well. You need to engage, you need to totally discuss with them and, get their inputs also in terms of whether the risk rating looks good, or do we need to add some more area or remove some area. And it's not only about looking at the trial balance or the financials. You need to look beyond the books to identify how to develop the audit universe, something like the CSR amendments which have come up, so many such things. If you exclude anything based on what your discussion is with the management or whatever be the criteria, all things need to be justified, or however you've come up with. Basically, you need to justify how the audit universe was drawn up, or if there were areas excluded, write it down. It's very important. We keep telling everyone that you all need to document. So what is a control environment? It's the softer aspect, whether the company has the policies and procedures. And it's not only just having the policies and procedures, are they actually using those policies and procedures? You could have a whistleblower mechanism in place like a policy, but you don't have a number also on which a employee can call. Or even if the employee lodges a complaint, there's no one who actually responds to it. Basically, you don't have a policy and procedure then. What is a management oversight structure? It's like everything just goes to the managing director, or is there a reporting structure that you have? How serious is the board of directors on the internal controls? What are their like talent and resources are number one important to any company. Now, if you have unhappy people, that means you're going to have a lot of issues, even if you're doing extremely well. So talent retention development programs of the company are super important. What is their overall take on integrity and ethics? That is also very important. So when you're assessing the audit, control environment, you need to see this. That's what will help you to develop the audit universe. How do you develop a risk-based internal audit plan? Is that, you have the audit universe like we've spoken about. You do the risk identification within the audit universe. You do a risk prioritization, that is high, moderate, low. You assess the control environment like we spoke about in the previous, and then you derive what is the residual risk. What is that, after my inherent risk, the controls which they already have in place, what is the residual risk? And then you develop an internal audit plan which is approved by the audit committee or by the board or the top management, and you document all the justifications of the process of arriving at the audit plan. So whose responsibility is it? It's the chief internal auditor's responsibility. What is the frequency? It's actually more than annual. Like last year, if you would have thought, there would be some companies which are, like an FMCG company, traveling cost, would be something really high. But with no travel, do you really need to keep including that in the audit, so you can swap it with another area, which is like cyber security, which has become super important. So then you look at the review frequency. Approval, of course, like we said, it has to be by the audit committee or the board of directors or the top management. What are the considerations? Risk appetite, yes, very important. What are the major risks? What are the business objectives? You have to look at the mission, vision statement, the memorandum of understanding. What is the business environment that they are looking at? Management inputs, very important. Now, so what are the key takeaways? I think I'm just going to take a couple of minutes and then, we'll go on to the question and answers. We need to be agile. We've always been looked at as post facto auditors, that you do some audit, you take like 3 months and then you come back with results. We can't be looked at like that. We need to be agile. Agile just doesn't mean doing the audit at the right time, but if you foresee risks, you talk about it now. That's agility. Value add is something that we have to focus our energy on. Everyone's looking out for value add, and without value addition, it doesn't work. What are the best practices? So you may have the same type of companies across the industry, or you need to keep reading about what the industry is doing. What are the best practices that are there across the industry, within the industry, and recommend that. Use of technology, like Mr. Jayekar is going to talk about it. Technology usage in terms of whether it is robotics or it is analytics or system-based control, very important. You need to have a business focus. Use of subject matter experts. So we use engineers, MBAs, all sorts of people. So so we have the forensic team who helps us with anti-fraud controls. We have the analytics team which helps us with analytics. So use of subject matter experts is very important. we need to keep a tab on the emerging trends. So this is basically which I would talk about in terms of the key takeaways. So I'm over to take any question and answers. Okay, I'm just trying to look at the chat box.
Ma'am, I have compiled some questions which came. I'll
Yeah,
just share my screen. Okay, I'll share my screen.
Sure, it will really help if you can do that.
So is my screen visible?
You mentioned that in normal situation, this could be considered a black swan event, but in hindsight, we have had a pandemics in the plug differently. Going forward, this no longer can be a valid question. Any learnings is that, like I rightly said, like I said that, risk is actually a combination of impact and probability. Now, our focus was more on only impact and looking at less of probability. We need to keep looking at events which have a probability of occurrence also and relook at it. We always thought that the probability of occurrence of a COVID-19, a black swan event, was almost negligible, when history actually shows that it was possible. So we need to relook at things in terms of probability of occurrence and keep relooking at it. So the only situational change is that keep looking for black swan. And another thing is, when we're talking about risk, we are always thinking about it as a negative thing. Risk is also an opportunity. So, I think all the tech companies have actually taken up opportunities out of that. So, risk needs to be looked at not as a taboo, but as a positive thing also, and convert risk into a positive event, opportunity for yourself. Hi, in case of strategic risk, how will you question a return on investment approved by management, especially when they have a risk appetite? Anything could be bracketed into risk appetite. Risk appetite has to be, more or less defined in, value terms, and it could also be defined in terms of, not only value, but would someone be okay with a reputational impact? Would they be okay with, prosecution implication? So you may have a value, but you may need to have some softer aspects also. So return on investment is approved. Anything could be bracketed into risk appetite. No, you need to document it very clearly in terms of what is a risk appetite, and you need to keep relooking at it. And of course, you need an approval from your audit committee and relook at it. And as internal auditors, we would still need to keep focusing and telling them that, it may be within your risk appetite, but there's still a risk. And we foresee this. Okay. How do internal auditors classify highly influencing and dictating management? And no classic examples. Where were the failures of statutory in reporting the fund siphoning and diversion of funds to these projects? Total big failure. What are the takeaways in reporting such instances? Where is the whistleblower policy working? So this could be like a corporate governance failure, like we're all talking about. And that is where, looking at, if we see, I was talking about looking at the control environment is very important. And we as internal auditors need to talk about the control environment. And that's the reason we need to have the audit universe, and we need to look at the environment. So if we see that, they have very little, importance given to the policies and procedures, or you have the audit committee, policy, or it's more namesake, it's not taking it very seriously. So I don't know about the statutory auditors, but from the internal auditors perspective, if you saw that you did not have policies and procedures, and when I mean policies and procedures, you actually have a mechanism working. So you have a whistleblower which is actually working. So sometimes we see that, you have your code of conduct which writes that your employees are forbidden from taking any bribe, but they don't even maintain a gift register. Simple as that. That's number one problem. And maybe the internal auditors didn't look at the audit universe. I'm not sure what went wrong with these people, but audit universe risk based is the number one failure that would have happened. And looking at the control environment, the softer aspects. What are the external agencies where such activities may reported under consideration of confidentiality and trust of information sharing with the auditor? What are the external agencies where such activities may not very sure about this question. I can't follow it. Can we go to the next one? How do you really present and convince outcomes of mystery shopping to management and process owners? How will you follow up on this point? Okay, mystery shopping depends on what mystery shopping you're doing. So is it something like leakages at a store, or non billing? So how would you convince us? Suppose there could be some aspects which could be convinced at, like, so if you're posing as a mystery shopper, and if you ask the person for some you've asked for a free coffee, and the person's given the coffee at a nominal rate. So if it was for 100 rupees, the person's agreed to give it to you for 50 rupees. And you have the coffee mug with you, and they can't see the bill for it, so you can tell them exactly the time at which you had got the coffee, and why is it not billed. That would be convincing. There is CCTV cameras which they can look at. So generally at every point of sales point there would be a CCTV camera. So if you tell them the exact time at which you went, and they kind of monitor the CCTV footage at that point, then there would be no harm in there would be no issues with convincing the management on outcomes of mystery shopping. So I think that there are some things which are you can convince, and some things you can't convince. I'm sure there's a trust on the auditor which the management would have, and that is the reason they would put you across as a mystery shopper. So some of them would be more trust related, the softer aspects. What are the courses? And mystery shoppers have to be really good with script play, with handling situations live. The way they're talking, it should look like they're actual customers. So that's a lot of it. You need to be equipped with the skills to be a mystery shopper. What are the courses, certification to equip himself? So one is the IIA, Chief Internal Auditor. Definitely you could look at that. You could look at DISA and CISA. Those are at least two things which I really think you should look at. And there are more niche skills on fraud assessment, etc., which the institute has. You should definitely look at them for equipping yourself as an internal auditor. What do you think scams happen? Why do you even after statutory auditor, so the number one reason for fraud is when people get together. Like if there are two people who get together, I mean, that's the number one principle where there could be a fraud and you could never catch it. So the reason for financial institutional scam is that top to bottom a lot of people were involved, and when two or more people in the same process get involved on a back-to-back basis, it's almost impossible to catch a fraud on a timely basis. Who's responsible to make the audit plan and it is actually the auditor who has to make plan, but the approval is with the audit committee. So the plan has to be by the internal auditor, whether in-house or outsourced. It has to be approved by the audit committee, but the inputs have to be taken from everyone. Are there more questions, or should I just open the chat?
Okay, Madam, we can take a few questions from chat box, ma'am.
Yeah, I'll just do that.
Yeah, few questions.
What do you I have posted? Can you illustrate some practical areas where you have identified a risk and non-compliance resulted in a financial impact? Where identified a risk. So a risk could be that your three-way check, which should be built within the system. So in the purchase cycle, there is something that you have a purchase or a goods receipt note, and you have an invoicing. Now the three-way check works in a way that the quantity and the price cannot exceed, and there are built-in controls within the system. Now we've identified such system lapses happening in the system. When you have such a thing, the financial impact could be that you could accept goods which are in excess of the purchase or the ordered quantity, and you could pay for something which is in excess of that particular particular order that you have? How do you identify ghost billing where startup jack up revenue for valuation? So ghost billing, wow, that's an interesting one. One is mystery shopping for sure, where you pose as a mystery shopper, you know that they are ghost billing. I mean, you went and you never paid for it, but they still billed for it. That's a ghost billing. So one of the ways to do is this. You look at the timing at which they do it. So yeah, there could be various ways you could do it. Forensic audits are event based, or they should become part of routine audit plan. Actually, as internal auditors, we are not responsible to do forensic audits. We are responsible to building anti-fraud controls within our particular internal audit plan. And once the internal audit plan is there and you find that there is a potential fraud over there, that would be a separate audit in itself. We are not investigators. We are just there to highlight there could be a potential fraud, and then there could be a separate engagement out of it. Do I have more time? I think it's almost 6, or do I need to, or can I take a couple of more?
Yeah, you can take one or two questions, ma'am.
Okay. Suggestive tools for internal audit in today's age of for conducting risk-based internal audit. So suggestive tools is one is data analytics. Mr. Jayekar is going to talk about. So there are various tools for that. Then you have the robots. So, for real-time revenue assurance related work, for internal financial controls, there are a lot of people who use robots who give real-time, results on that. So that's some of the tools for internal audit. I am responsible for, I think I've kind of answered that. No, we are not responsible. One of our responsibilities is to have anti-fraud controls to be checked, but we are not fraud investigators. There's a difference between the two. But your audit program has to be built in a way that you have anti-fraud controls tested. You highlight there could be a potential fraud. If you come across a reason to suspect that there is a fraud, that investigation is a separate assignment. We not as internal auditors. Any other? I think.
Yeah.
I think it was short of time.
Fine,
yeah.
fine.
Yeah.
Fine. Thank you.
I'm
Thank
sorry,
you.
I
Thank you
can't
so
take.
much.
I'm hoping I'm able to answer some
Yes,
questions.
yes,
It's just
yes.
short time frame, and the
Correct.
questions are also very elaborate sometimes.
Yes, ma'am. Thank you. Thank you so much, madam. So, within a very short time, you have presented well. You have answered almost whatever the questions posted by the participants. Thank you. Thank you so much.
So I think someone's just asking me, he wants the slide. I think I will share the deck, which can be circulated to the participants.
Yes,
so,
definitely.
There's no issue with that. And they can feel free to email me. Also, my email ID is there in the presentation. So that's definitely an okay.
We do that. We do that.
Sure. I hope I've done justice to at least bring in some basics of internal audit and risk-based internal audit and the emerging trends.
Great, Madam Daftary. It was a scintillating presentation. I was trying to listen through my audio system. Great. Very good.
Mr. Nanda, thank you for giving me the opportunity. And it was very short. I hope I've really addressed the questions.
Always there, madam. We'll call you more often on our Delhi platform also. Great.
Sure. Thank you so much. Thank you.
Thank you so much, madam. Very respected CA Saranjit Singh Nanda sir, Chairman of Internal Audit Standards Board, ICAI, and other participants. Once again, very good evening to all of you. Fortunately, today we have with us the chairman of this particular committee to give a keynote address to the participants. Nanda sir is very dynamic and a great motivational speaker. Presently is the chairman of Internal Audit Standards Board of ICAI and the chairman of Committee on Management Accounting of ICAI. Is the vice chairman of Continuing Professional Education Committee. Is the member on board of the almost 26 committees of the Institute of Chartered Accountants of India. He nominated on the IRDS steering committee for implementation of risk-based capital regime. He was the member of Quality Review Board set up by the Government of India. He was a member of SEBI Advisory Committee on Primary Market. He was the convener of the expert group constituted by the Ministry of Corporate Affairs, the Government of India, on investor protection. He was the member of SAFA, the Southern Asian Federation of Accountants Committee, on improvement in the transparency, accountability, and the governance. He was the chairman of Northern India Regional Council of the Institute of Chartered Accountants of India for the year 2002 and 3. presently is the one of very, very dynamic Central Council member from Northern region. With these few words, I am very much happy to introduce Nanda sir to give the keynote address for the viewers. Thank you so much, sir.
Thank you, Mr. Jalpati, for your kind words. Mr. K. Jalpati, the Honorable Chairman of Southern India Regional Council, Mr. Pannaraj S., the Secretary of the Southern India Regional Council, my very two great friends. Madam Rachana Daftary, who made a very scintillating presentation a few moments back, and two of my very revered friends and speakers, Mr. Paul Jayekar and Mr. Samit Saraf. They have presented a number of times on the Inter-Audit Standard Board, and they have always proved their mettle. So first time I listened to Madam Daftary, but she also spoke exceedingly well. Along with Mr. Paul Jayekar, we have Madam Deephika, who would also give a presentation. So ladies and gentlemen, I look forward to see a great session of theirs. I'll just take a minute of yours before I start showing my presentation. 1 second, just a minute. Since yesterday morning from 6:30 to 3:30, I'm attending an international conference of Malaysian chapter, and there I have been seeing so many glitches. And first time in my life this glitch has happened. So I was just saying how glitches can happen, and God showed me that glitches can happen anytime. So should I start?
Yeah, you can start, sir, please. Yeah.
So the coverage of this session was very meticulously planned by the Secretary and Mr. Jalpati. It included 5 major topics: the risk-based internal audit. Second was the internal audit of HR function. The third was data analytics adding value to internal audit. The fourth was internal audit learning from Mythology. And the fifth was procurement to pay. The first session was very effectively taken by Madam Rachana Daftary. It was risk-based internal audit. Let me tell you, ladies and gentlemen, that risk-based internal auditing allows internal auditor to provide assurance to the board of directors. You all are aware that internal audit essentially is a management function. And that management function has to report to the board of directors or to the audit committee, as the case may be. And the reporting primarily comprises that risk management processes are managing risks effectively, having regard to the risk appetite of the organization. I got a call from one of our clients. He said, Mr. Nanda, can you tell me some business where there is no risk? I laughed and told him, I said, sir, please let me also know that area, that business. I'll myself do it and ask my friends also to do it. Let me tell you, where there is no risk, there is no opportunity. There is no risk, there is no reward, no return. So risk is to be taken, but it has to be effectively managed, and a calculated risk has to be calculated. Right, risk-based internal auditing begins with reviewing the organizational objectives. It is the job of the internal auditor to ensure that the mission and philosophy of the board is ultimately percolated to those people who perform the task. He has to consider the risks that impact on the achievement of those objectives. If they are hampered in any way, that needs to be immediately stopped. Any impedient has to be immediately curtailed, has to be restricted. And it examines the methodologies in place to mitigate the risk. So that methodology, which ultimately mitigates the risk, is very important. Now, what is the value addition in risk-based internal audit? The auditors can, through risk-based internal audit, provide feedback on the control environment. The weaknesses of the control environment can be highlighted, the adequacy of internal control, and they can be a source of information for monitoring risk. Second, the cycle of continually assessing risk, effectively planning audit activities, and effectively performing, delivering, and reporting audit activities, which result in an overall lower risk to the organization. Please understand, risk is imminent. You have to mitigate the risk when it comes. And in future also, if it arises, it has to be effectively mitigated. This is the basic purpose of value. This is the basic value addition done by risk-based internal audit. The second session to be taken by Mr. Samit Saraf is internal audit of HR function. I would like to just highlight the need of internal audit of HR function. The internal audit of human resource function, what does it aim to? It aims to examine the corporate culture and HR strategy of the target organization for compatibilities and identification of risks. You need to very effectively know that the most valuable capital with the corporation is the human capital. It highlights opportunities for improving the effectiveness and efficiencies of HR practices. Again, very, very important. It is there to reveal the strengths and weaknesses in the human resources system and all issues which need resolution. Please understand, the strengths and weaknesses in HR system which need resolution is again very, very important. How you retain your people, how you engage them, their competencies, how the diversity and inclusion of those people, including recruitment, onboarding, strategic plan, performance management, coaching, leadership development, professional development, career pathing, recognition programs, total rewards, they all encompass the internal audit function. The areas which need to be essentially reviewed are documentation, legal compliances, and authorization metrics. You have to very effectively check and report on the compliance with Accounting Standard 15, employee benefits. The procedure controls, leave policy, payroll and payment processing, full and final settlement, bonus and pension, all these processes, all the documents need to be effectively looked in by the auditor, the internal auditor. And you have to ensure that the recording of transactions, the quality, the good governance, reporting, all are in the right esteem for which it was created. Now you need to have a pragmatic approach when you go for HR audit. It is not a mere stereotype function. You don't need to just check the box. Even if all policies are completely up to date and legally compliant, but the paper and practice, if there is a mismatch, if they are not in sync, the risks increase exponentially. Very, very important. The latest session, I would like to tell you how there are risks of bankruptcy, how there are risks of cooking the books of the company. When you say you do, isn't what you actually do. The otherwise good policies you promote can create significant liability, foster mistrust and miscommunication, and create chaos. Any misstatement where you lose ultimately tends to lose the credibility of the organization. I want to tell you one very important thing, that all too often they feel that internal audit focuses solely on whether HR tasks are performed in a compliant manner. But a comprehensive internal audit looks to see if tasks are completed effectively and efficiently. Very, very important. Effect and efficiency both have to be matched. Section 3 is to be taken by Mr. Paul Jayekar and Madam. It is on data analytics, adding value to internal audit. Now, please understand, with the advent of technology, data analytics is a great tool in the hands of internal audit. Internal audit, which started as a small function years back, has now taken the front seat, the driving seat. It is a sunrise industry of the world. Data analysis is used to analyze data and find transactions that don't fit normal patterns, exception reporting. These tools don't take auditors out of equation. In fact, they give them free time to look at the results of analysis, which is very, very important. What actions should be taken is very important. The auditors have data analytics tools at their disposal, and therefore, most of their time is available for providing insight to the clients on issues which need the proper involvement of the auditor. Auditor offer value-based services to their clients based on audit data analytics results. Several elements are required for the successful integration of data analysis throughout the internal audit methodology. There are so many things all across, all needs to be synchronized, because if a bunch of data is left, the results may be drastically different. The analytics will focus on falsification of books or manipulation indicator. Yes, any falsification, any misrepresentation will certainly become. The second important thing is the Montier C-score. Montier score was devised by James Montier. It reflects 6 criteria to determine whether a company is cooking its book. Very, very important for people who want to go into analytics. They will have a larger impetus, and Mr. Jayekar will very efficiently resonate this for your benefit. The second is the Benisham score. Benisham score is a mathematical model using 8 financial ratios determining whether a company has manipulated its profits. So they are again very, very important things which will put you at a parlous where you start understanding the value of data the value of inference, very, very important. Whatever data is published, ultimately all important investment decisions are based on that. Now, what are the bankruptcy indicators? I'll share 3 of them as outlined here. One is the Olson's O score. Now, what is the Olson's O score? It was propounded by Mr. James Olson, who said that you have to focus on distress here and determine whether a company will bankrupt itself in near future, whether there are early signs of bankruptcy. The second is Altman's Z score. Altman's Z score is again a probability that a firm would be bankrupt within 2 years or not. Here, there are zones you have to take a company's working on safe zone and on the distress zone. The last one is Piotrowski F score. Now, Piotrowski F score has an assessment on points 9.0 to 9, in which they determine the strength of a company's financial position. It is directly proportionate for investment. If 9th is the score, it is best for investments. The company would become a great investment destination. Next session, internal audit, which is tomorrow, it is on learning from mythology. You are aware that always, although all are equated with the Indian epic, but how much relevance it has in today's world, particularly when it comes to your professional life. You are aware that the Kauravas were numerous, yet they lacked strength. Make your team work for a common goal rather than individual goals. Very, very important. Everyone is welcome to contribute. Listen to everyone and teach them how to work together. The leaders never want to create followers. They want to create leaders who could effectively take the goal forward. The more individuals you have working on various goals, the more efficient your output will be, because ultimately they all will synchronize towards the common objective. The Kauravas one-man leadership method, the Kauravas one-man leadership method didn't work, and it is never going to work for you. The last session of tomorrow is procurement to pay. Why internal audit or procurement process? You are all aware that material is a very important cost in any manufacturing organization, as it involves major portion of the total production cost. The objectives of checking of material procurement is to ensure that right material is procured at the right price, at the right time, and in the right quantity. Very, very important. Going ahead, what does it do? Where does it help? The internal auditor essentially helps the management in identifying procurement fraud. It helps in highlighting red flags in a procurement process. It helps to conduct data analytics for extracting procurement loopholes. If data analytics is done, then loopholes can be plugged for all future initiatives. However, new loopholes may come. A fraudster is a man who is very intelligent and understands the weaknesses of the process. He can always chip in, but the process control should ensure that it is immediately eliminated whenever he tries to do so. And it is internal audit helps in conducting investigation of procurement fraud, if any. Coming on to my last slide, it is that internal auditors are expected to address new and familiar risks and opportunities in a more efficient manner. The risks and opportunities, they all will remain in the same facet, but the matter of handling them has to be different. What has they to do? They have to foster great supply chain transparency. Very, very important. The supply chain transparency will ultimately assure that procurement is on the right track. Increase the use of technology to audit key business process controls. Example, supplier management more efficiently. Address and manage existing and emerging risks. This is very, very important. Through analytics, through robotics, through artificial intelligence, you could gather so many things that you are able to effectively comment on any existing or emerging risk that has been unnoticed. Because risk, if it starts at zero base, can ultimately devour the whole company. You have to enhance, the auditor has to enhance the efficiency through technology-enabled auditing. Yes, a very, very digitized environment where you help the management in bringing and taking a look at all the facets, no test checking, 100% error-free working. And the last is nurturing the internal audit collaboration and networking externally. Very important. It has to be controlled as well as the adventurous nature wherein the company can always go and compete with the competitors and emerge as a winner. So I want to thank you all for giving me a patient hearing. My presentation is now complete. I would like to just tell you one thing very importantly. We all are working in this great pandemic. And I want to tell you that this pandemic can do everything, but it cannot displace ourselves. Please understand, this pandemic can do everything. It cannot put us out of order. I told you I was in a Malaysian international conference and they spoke about ECG reporting. What is ECG reporting? E stands for environment, S stands for social, and G stands for governance. So ECG reporting essentially refers to covering a company's operations in these three areas. In a second, I would like to just conclude that ECG performance ratings and reports shows the investors, the company's efforts to mitigate risks and generate long-term sustainable financial return model. You have to create value. If you are not able to create value, you are not required. We don't want to do post-mortem. Therefore, we came to concurrent working. So as internal auditors, ladies and gentlemen, we have to work in this direction. Not taking much of your time. I see both of my very dear friend, Mr. Samit and Mr. Paul Jayekar, waiting for these sessions. I want to just tell you, you are on the right track. I want to compliment and congratulate the chairman and the secretary, Mr. Jalpati and Mr. Pannaraj, for thinking of this program. And let me tell you, something more is in store. We will be holding a national conference also for Internal Standard Board. I am promising you, whenever Mr. Jalpati wants. Mr. Jalpati belongs to a place which is very close to my heart, Coimbatore. And the chairman is a man who is the CEO of the regional council. He has to steer the regional council and ensure very passionately that members get all the information which they desire. So not standing between you and the relevant speakers, I say goodbye to you. Have a nice session ahead. And in case you feel any problem, we would be very happy to serve you. The board is there at your beck and call. Thank you. Thank you so much. Bye-bye.
Thank you. Thank you so much, sir, for your brief presentation about internal audit and the overview of the program with your keynote address. In spite of some technical issues, you have presented very well, sir. Thank you so much. On behalf of SARC, my sincere thanks to you and the members of Internal Audit Standards Board of ICAI for giving us the opportunity to host the program on internal audit. Thank you. Thank you so much.
Great. Great.
Now over to say Samit Sarif. So you can proceed, sir. Second session we can start.
Thank you.
Great, sir.
Audible?
Yes, sir. Yes, sir.
Yeah, I'll start. Thank you.
Yeah.
Thank you, Nandaji and the IASB for the opportunity to present at such an august audience and amongst an esteemed panel of speakers at the Conclave of Internal Audit hosted by the SIRC and IASB jointly. Also like to thank Jalapati sir, Pannaraj sir and the SIRC for hosting us at this forum. Thanks CA Rachana for setting the pace with such an enlightening session. She started really well. My topic today is internal audit of HR function. HR, as you all know, is a support function in most companies and is generally part of the annual audit plan that is charted by the internal audit team and approved by the audit committee. The opportunity for us chartered accountants to audit an HR department is twofold. One, we are the external auditors, external internal audit firm that the company hires to audit the HR department. Or secondly, we support the in-house internal audit department to conduct this audit as and when required. In today's session, we'll be covering various aspects of basically the scope of what we need to cover, what the hire to retire process is all about, what challenges we face, some findings that we have had over the years, and my learnings and tips that I would like to impart today, which can, in turn help you conduct a full-fledged HR audit in the future. With these words, I'd like to start. What is value addition? Very important for internal auditors because as Section 138 mandates internal audit for certain companies, there are certain other companies which are emerging corporates which don't fall under 138. So with the top-down approach, they look at us for giving value addition to the company and their processes. So James Roth in his paper has given 4 factors of how we can define addition of value, that's value add. The first is having deep knowledge of the entity, about its culture, key players, competitive environment. Basically, you need to know the company very well. You need to do your background research. You need to know the external factors that affect the sector and the company and its operations and processes before you start any audit. In this case, especially HR. Second, you need the courage to innovate, basically, that the stakeholders don't expect. So there are certain processes in a legacy run organization which the audit committee is used to, or the C-suite level or the process owners are used to. If you see that a process can be introduced or a corrective action can be introduced which can disrupt the current process in a very beneficial way, you need to have the courage to present that to the management and ensure that the process is improved. Third, you need to know the broad knowledge of all those practices that the profession generally considers as value add. So basically, your study of your subject needs to be very detailed before you conduct an internal audit. And as I previously mentioned, creativity to adapt innovations. Once you innovate, basically, you will see the results. And Rome is not built in a day. You will not see the value add in a day. But as you progress in the audit each and every year, you will see the value add, and the management basically needs to see the benefit for you to be renewed. The index of contents of my presentation today will cover the expectations that the management, the C-suite, and the process owners have from internal audit. We'll also see what the HR universe covers. What is the process of hire to retire process per se? The scope of any HR audit under the internal audit plan is next. Some challenges that we as internal auditors face while conducting the HR audit. I'll throw some light on the process-based approach that we follow for HR audit. Key skills that the audit team needs to have when you go in for an HR audit. I'll also highlighted some findings in our past experiences, which might be helpful for the participants today. Penultimate is how you report your findings. It's very important how you report at various levels in the company. So I'm going to throw some light on that as well. And lastly, my own learnings, which I'd like to impart with you as participants. Coming to the first slide, what does the audit committee expect from the internal auditors? They don't have a lot of time for you to go in and give a 20-page report of your detailed findings. So it's very important that you report very crisp. They basically need an assurance on the controls, whether they are in order or not. Some audit committees are made up of independent directors. So they need, compliance needs to be perfect. That is the top-down approach that we see in our experience. An executive summary of the high-risk findings generally goes to the audit committee, and they discuss those with us at the audit committee level. So they need to know if the process is being run in the expected way or not. Statutory compliances, as I said, is 100% adherence that every audit committee that I have had an experience of presenting at requires. Next, you come to the C-suite level, which is typically your CFOs, your CEOs, your CEOs. They would look at value add. They would require new findings in each audit. If there are repeat observations, you're not doing something right. So your corrective actions need to be in order. And there needs to be value add because it is going to be mapped against the fees that they are paying you. Also, they'll map you on the cost control or cost optimization inputs that you are giving as internal auditors, which can in turn help their bottom line as well. So they will look at you from that angle. And process owners are basically the auditee, the HR audit team or the HR team in the company. They would want you to understand how they actually work at the ground level. So there are problems they will try to bring to you. But as auditors, you need to have a bird's eye approach as well, because you are reporting to the board at the end of the day. It will also require you to maybe drop some issues which they are resolving during the audit. So you can take a call on that as auditors. If it's a high risk issue, you need to have the management comments and then report onward. The HR universe, it's basically made up of four macro parts. First is on-roll employees, that covers your payroll. Second is your outsourced manpower, which covers the contract employees, the contract labor in manufacturing concerns. Third is vendor management. So vendors starting right from recruitment to background verification to manpower supply agencies and various other professional organizations that the HR audit or the HR team is employing as part of their functions. You cover that here. And lastly, statutory compliances, which covers labor laws as well as non-labor laws. What is the hire to retire process? It all starts with planning, the requisition. The requisitions come from various product teams or various departments within the organization to the HR of the company that they require a certain amount of people as part of their annual plan of hiring. Then it moves to recruiting. Recruiting would then go on, you go to job portals or you are hiring people. So the entire process of how you recruit and the criteria that you recruit on, that is covered under recruiting. Once the employee is onboarded, employee management would cover induction training that you are imparting at the start of any employee's onboarding. So this is a very important aspect, and many companies try and they push the induction training as well. We look at it as a very integral item because that is where the employee's life cycle starts. It then moves to compensation and benefits, which covers the CTC, the fixed and variable part. All the planning takes place at this level. Next is retire, exit. So your transfer, your relocation, your resignation, or a person exiting, or an employee exiting from the organization, various levels, various clearances, the exit interview, that aspect is covered under retire and exit. Next important aspect is employees' data and info. So as part of whatever the employees are giving as part of their KYC or their crucial confidential information, it should be saved in a very secure manner by the company. And how this data is maintained securely is something that we cover as part of an internal audit. At no level should it should be compromised. Lastly, it is payroll. Payroll, as you all know, it has been covered traditionally as well. And in hire to retire, it's a very important process because it is a monthly process that you see. So in payroll, typically sometimes it's in-house, sometimes it is outsourced to various payroll agencies. And if it's outsourced, in that case, you need to know the SLA, the terms, because it's confidential data. And you need to read the SLA as auditors and ensure that confidentiality of this data is being maintained. I'd like to next come to the scope of HR audit that we follow. First and most important is compliance with the SOPs. There are various processes that you've just seen as part of the hire to retire process. So in those 8 aspects, every item or every area should have an SOP. When you say that there is an SOP, it should be documented, it should be signed off. Many times we've seen the SOP comes to us in an editable Word format. Typically, that again is a risk because you should always then stress on the fact that you need a signed off SOP for every process that there is. Next, you need to ensure that it has been circulated to the respective teams. They need to know what the process entails, what work they are doing, because practically many a times legacy practice is seen in any HR department. But when you audit against the SOP processes, there are chances of discrepancies. So it's very important that you map both together. It comes out in a walkthrough as well. So this mapping is very important. And lastly, testing. As I mentioned, testing of controls mentioned in the SOP is very important. If you need amendments, if they come out post-audit, you need to ensure that the corrective action and amendment of the SOP is done. Next, you come to manpower planning and budgeting. It covers aspects like recruitment, rehiring, that the company has to go through, various departments right into the HR department with their requirements. So how those budgets are mapped, whether the actuals are escalating over the planned HR budget that the department had. All these mappings need to be done by the internal auditor as part of this particular scope. Third is background verification. Now, background verification typically is done pre-joining in many cases. In some organizations, we've also seen that it happens post-joining. It depends on the policy of the company. So please check the SOP around this area. Many a times we see that the mandate of background verification is given to specialized agencies, which are special background verification agencies. Do understand the terms of how they cover it. You also need to see the reports that they're giving. So it's a detailed study that you need to do, because end of the day, they are joining your organization, your client's organization. So the people that are coming in, whether the background is correct or not, whether some areas are missed out, that is covered under this particular item. Next is induction training. What is the TAT? That's a turnaround time. So if an employee joins today, when or till when can the induction training be imparted to this particular employee? You need to see the policy around it. The criticality is such that if it's a data sensitive or take for example BFSI, where they need to know the various services in a service oriented organization, they need to know what services are being imparted as part of their work and their responsibilities. So the sooner the induction training is done, the better. Our experience says that it sometimes stretches up to 6 months, 9 months as well. So which is again a reputational risk and various other risks that are attached if the induction training is not completed. So you need to include that as part of your scope. Very important item is attendance. Various types of how attendance is captured. Biometric, which you see in many corporate offices these days. Geotagging. Geotagging is basically using GPS. So for example, if the employee base is on the field and they don't report to office, with their permission, of course, they are tracked with a GPS, and the HR department ensures that they are actually going to the client's place and doing their charted work on a particular day. Manual methods are seen typically in factories many a times, and in COVID as well, we've seen some clients disabling their biometric, obviously for the risks. So manual methods are registers that are maintained. There are many risks around it, like overwriting, or they use whiteners. So you need to be aware of those. And integration with ERP. So if advanced ERP is being used by your client, check whether the attendance can be integrated as part of this ERP. It makes your work simpler. Once you check the controls of this IT ERP software that is being used, a lot of risk is assured when you are auditing that. If it is not integrated with ERP, yes, controls need to be stronger as an internal auditor. Next is about leave management. So your mandatory time away, whether that is actually being adhered to, an employee is given the fixed leave that he has to stay away from the office, whether that is done. Various types of leave like casual leave, privilege leave, sick leave, what are the policies around that, and leave encashment, which is again a very popular mode that the HR has to deal with on a daily basis. So you can check the policies around it as well. Vendor due diligence is next. When you onboard a new vendor as a company, what is the frequency of the due diligence that is being done? If you are giving a critical process of the HR department to a new vendor or a company that has been just started 2 months back, what is the risk around it is something that you need to assess. Whether a third-party credit agency you're hiring, your client is hiring, you need to check around that as well. What are the controls that they are checking this particular vendor around, and what is the assurance they are giving the client? You need to check everything around this. Independently, as an internal auditor, you can check the ROC master data, for example. If any compliances are glaringly missed, they're not filing the annual returns, for example, the share capital is low, but a big chunk of the company's work is outsourced to them. It puts it at a risk whether this company can do it or not. So various aspects around due diligence. Next, payroll processing. Two types, in-house or outsourced. Both have their independent risks, so you need to check the controls around it. Salary advances, again, legacy practice. You need to check whether regular recoveries are being done, whether the grade of employees, whether they're eligible for getting advances in the first place or not. This is covered under that. Outsourced manpower. How is the manpower supply agency selected in the first place? Do they fall under the eligibility criteria? Is something you can check. If it's a RFP based thing, you can check the RFP and the bids that have come in. Type of staff can differ. Sometimes it's in the office, sometimes it's in the factory, so it differs. But when you see the RFP and the terms, or the PO and the terms, as an auditor, you need to map whether the company has taken care while onboarding a particular manpower agency or not. Thirdly, last is the agreement. In that case, you need to check the service level agreement, whether clauses like PBG, that's performance bank guarantee, whether it is adhered to, and various other submissions that the vendor has to make, whether they have done it or not. Statutory compliances, labor laws and finance acts. You need to have knowledge of both as an auditor. And if it's a pan-India organization, the labor laws might change with each state. Even the finance acts, various things can change. So you need to check the state laws if you're particularly auditing a state. If you're doing pan-India, you need to have that knowledge. Employee separation process. What is the process around exit interview, full and final, and securing IP? So when an employee leaves the organization, how does the company protect the intellectual property that the employee has with him, which is the laptop, whether the data is secure, whether from a confidentiality angle and a security angle, what are the controls that the company is taking? As an auditor, you need to check that. And lastly, data confidentiality and security. Many a times data is shared on email. You can check the IT controls on that. And generally in data sensitive organizations, how are the company's controls around security of data? Very important in today's time where everything is happening online. Even our call today is happening online. So it's very important that you imbibe the skills of checking it from an IT angle as well. Sometimes you need an IT auditor. So if possible, you can add them as part of your audit. Challenges faced by internal auditors typically during HR audits. This is from my experience and over the years. So I'd like to throw some light. Duplicity of data received during audit. Many times what happens is initially when you have the opening meeting, they might give you some data, but then again, they come back to you 1 week later and says, sorry, that was the wrong data. And we need to give you the second file because there was something missing in the earlier file. It's very important because you have certain timelines that you have set, say 6 to 8 weeks, again, depending on the size of the organization. But when you have multiple files coming in during the midst of an audit, it extends your time. So you need to be very specific at the start itself and ensure that these are the final files before you start the audit. Second is data limitations. Many a times due to various reasons, the audit team might tell you that we can't give you. For example, payroll, sometimes they're hesitant to share it on email. So if there are certain items like that which they cannot share, you need to be very clear and say that, look here, I do not have this data. So this is a disclaimer or a limitation in my report. I cannot comment on this. Third, sometimes what you see is data is provided closer to the audit committee meeting. Everyone is scared of what the audit committee wants to say, and every auditee is typically apprehensive of that. So as this meeting nears, many times we see a load of data comes in. So to ensure that you don't spend a lot of sleepless nights at the end towards the audit committee meeting, you need to have a hold on how your list of requirements is flowing to you. Be very aware about this point. What has happened in COVID is basically sometimes physical attendance registers or agreements are at the office, and it is too bulky to send over email. So physical data, which is inherent to that company, is maybe not made available to you. In COVID times, we are rarely visiting the client's place. So you have to take an assurance on this level of how you are going to comment in your audit report. Failure of IT controls, typically over attendance tracking. Now that some employees have not gone to office at all in the bigger organizations like large corporates, they're still working from home. How is the attendance being tracked? So we see various methods of that. Sometimes the ERP that the company is using typically tracks the login time, log off time when the employee typically logs in, or the HOD of the department will give an assurance to the HR at the end of the month ki this employee, or I have 10 employees under me and they have attended so and so days. So on that basis, they're doing the attendance and payroll. So you need to check what IT controls there are. There can be a risk around that. Data shared on email. Now, many times confidential data is being shared with us, especially during the pandemic time. Who takes the onus of the data security? You need to be very clear on the indemnification, whether there can be some charges on you if the data leaks from your end. So you need to be very clear with the client on the risks. Obviously, as auditors, we are ethical, we are we have integrity in everything, but you need to be very specific with your client because it should not cause a risk later of data loss. The high risk issues having penal implications, especially those with high financial penalties or imprisonments. How do you address? Now, typically, we've seen in some organizations in the past that when they see a risk, or the board or the management sees a risk which has imprisonment, and mostly our audit is always of past period. So that risk is inherent. They would not want you to take it up to audit committee. That is also something, and they will say that, we'll iron this out very soon, don't worry, and they typically don't want you to report. Very important, because the risk then is on you of reporting. How do you take a judgment? Be very clear of, especially these items which have imprisonment and high financial penalties. You need to stress more on that. There is a difference in reporting when you make it to professional boards, which are, in JV companies, or it has independent directors, versus those which are family run or promoter driven. The professional boards need you to be above board at all times. They need to know whether we are 100% complying with the statutes and all the rules and regulations, which does not put the company at risk in any way. Versus promoter driven, well, they will take it in their understanding and say, we will take care of it, no problem, and all that. But the risk for you as internal auditors is to ensure that you are reporting this at the board level, because then you are passing that information, very important, sensitive information, which needs the immediate attention of the management. And what they do after that is something that you can track as part of corrective action, but at least they are aware. Next is about when you report critical issues, what are the liabilities and disclaimers that you need to give? What is the security you need to take? Because many of these are past events. You need to develop something on that. That can be a challenge. Typically, when you audit or you go to a new client, they would want you to bring the industry best practices. So one question they will ask you is, does you as auditors have past experience in this particular sector? Now, you can say yes or no, but that's how you are supposed to go in. Then we see knowledge limitation as well within the audit team, which you need to plan your audit in such a way that you have the required skills in the team. My previous speaker has already thrown some light on how you need to plan an audit, and in the interest of time, I will just give a brief of this. There are 4 main pillars: planning, fieldwork, reporting, follow-up. How you plan the audit, keeping the auditee informed so that there are no obstacles. Plan your audit opening meeting in such a way that it's very clear, sign off on it. Your fieldwork, you need to give accurate or close to accurate timelines of how you are going to conduct your walkthroughs, your data analysis, how much time it is going to take. And exit meeting will typically have a discussion of the draft report, what corrective action you are suggesting, and the management comments. And then this reporting is going to the board. Once it is reported to board, it is then tracked as part of the action taken report, ATR, for previous audit compliance when you start the next audit. Key skills that typically you need as part of the HR audit team: you need to know your labor laws, your stat compliances, which are Finance Act and labor law again. Your team needs to know how to test controls as part of the risk control matrix. Very important, because most companies have their own RCMs in place. So as auditors, you need to test whether they are functioning well or not. You need to understand how the base level, the ground level is working basically. So understand and step into their shoes to see it from a business angle. Obviously, you have to report as auditors, but you need to understand their side. Audit various processes, keeping risk in mind. Keep the end result in mind. When you start a particular process, you need to know the risks that can be a result of that. So your process understanding is absolutely important, without which, if you have an incorrect or an incomplete walkthrough, it can affect the end result. You need to know how to carry out a root cause analysis. Very important again, because to avoid repeat observations in future or next year, this is very critical. Look beyond financial risk implications, look at it from a reputation risk, look at it from an operational angle as well. As auditors, we typically look at financial only, but try to include the entire risk universe. And your team needs to have an HR expert, a qualified CA, or a semi-qualified professional, an IT. So depending on the size of your client and the fees that they are paying you, you need to plan your audit team in such a way. Key findings, I've tried to throw some light on past key findings. I'll quickly take you through those. When you check SOPs manuals, the issues that we see is sometimes SOPs are not documented. Every process that the HR department has, such as vendor selection, recruitment, attendance, leaves, payroll, needs to have an SOP. If you do not see an SOP, that is your first finding, and a high risk one at that, because it should always be system driven, not people driven. Next, training manuals for newly onboarded employees. Very important. If it's verbally imparted to them, some of them might miss many critical angles. So your employee training manual needs to be there in place, and that SOP needs to be there. We have seen it's not there in many places, and we've suggested it as part of our audit. Non-documented missing processes. You might see the process SOP, but in that some critical sub process is missing. So when you do the walkthrough, ensure that what they're telling you or imparting you in the walkthrough is actually there in written. If it's not, suggest. When you see recruitment, sometimes you see background verification is not conducted. Now, in case of data sensitive companies, very important that you need to know the type of people that you're onboarding. So important item. Background verification is done, but there is a delay in getting the report. Person is onboarded for, say, in April. Report is coming in November. There are 7 to 8 months that have passed, and there's a crucial period. If something goes wrong and you don't have this report, we've seen this issue in COVID that they say we can't go to the employee's place and actually do the background verification. Whatever the issue is, you need to discuss actively or ensure that your client is discussing actively with the vendor that is onboarded for this, because these are very critical items. Sometimes you see background verification conducted after the issue of audit, the offer letters or date of joining. That can also happen. It's client to client policy, but ensure that it's within that and there is no excessive delay. Anomalies found during review of background verification. Now, by this, I mean, you see the report, for example, the address that the employee or the onboarded employee has given and the photo that they have put of the address, two different things. There can be various reasons. Sometimes we have seen PAN and Aadhaar are left blank. Now, KYC is a very important item that needs to be covered, but sometimes you see missing data fields and the companies are paying because this document is submitted. So there should be someone who's reviewing it as well. Next is employees who have missed the mandatory induction training program. Again, where it's service oriented, it's very important that all the employees are going through the induction training at least within a certain TAT of their onboarding. If they miss it, immediate one, then the next one that is happening maybe a month later or 2 months later, the HR has to ensure that all employees are being covered at the end of the year. Pre-employment medical check not conducted. It's very important. It again differs from company to company, but if it's part of policy, you need to ensure that all employees who are onboarded, the company is doing the pre-employment medical check. Fraudulent KYC documents submitted during onboarding. Now, like I mentioned earlier also, sometimes it is not covered in background verification, but when we have checked, we have seen multiple Aadhaars or multiple PANs that certain employees have given. So again, that we pointed it out, and the employer was made to answer, and clarifications were taken. In certain cases, the employees asked to go as well. Excess payments to recruitment agency, part of process, but you need to check whether the PO terms are adhered to and payments are made accordingly in line with invoice. Data sensitive organizations require police verification. Sometimes it's incomplete, that needs to be ensured. Employee separation, leave encashment sometimes is not adjusted properly against the unserved notice period. Sometimes employees leave without serving notice period. So how the full and final is done, this issue is around that. Next issue is also around full and final, where we have seen there are deficiencies in how it is calculated. Leave encashment being paid to those non-qualifying employees. Read the processes that are there as part of the SOP. Whether in my client's case, if they had served with before 1 year, they were not eligible for encashment, but still we had seen that it was paid, so we flagged it. Unsigned exit documents. This is basically the clearance from the HOD of that particular employee's department, whether the clearance has come in, whether it is signed or not. So we have seen that it was unsigned in many cases and the employee has left with full and final. So this is very important that we need to ensure, because in future things can go wrong. Non-recovery of salary advances from departing or absconded employees. This is part of payroll that you need to cover. Typical issue that comes across. Access to premises and system not disabled within that. Suppose the employee leaves today, companies have in 3 days or whether on the same day, they will be disabling the access to premises and the systems. But sometimes we've seen that it exceeds the tag that is given and part of the SOP. So you need to check, because it is critical to data loss. Company assets not returned during exit. If the full and final and the clearances are not in order, sometimes the laptops, the mobiles, the assets that the employee has is not returned. So what is the liability of the company? Obviously there is pilferage and theft. So what is the company's comment on that? You need to bring that out. Outsource manpower, check the agreement clauses, typically around performance bank guarantee or some eligibility criteria. If the documents have to come from the vendor, whether it has come, whether the agreement clauses are adhered to or not, as auditors we need to see. Excess short payments made to manpower supply agencies. If they have given 10 employees per se and we are making payments for 11, we need to compare the attendance registers along with the total employees that they have given as per agreement, and accordingly payments need to be made. Very important that we've seen in our past, there is a scheme that is PMRPY, where the PF component is paid by government. We see in that contractors sometimes claim the PF from the company as well as they claim it from the government. So it's a double benefit that the contractors are taking. When we have flagged it, they have blacklisted the contractor in that case, because it's a lapse in controls basically, and also it's not being truthful or ethical to your jobs. So very important, please add this as an angle. You can find this in the ECR Chalan, the second last column. It's written as PMRPY. So please check that when you do the audit. Attendance records not aligned with contractor bills. Sometimes the attendance of all the names that are mentioned in the annex to the contractor bill, you will not see in the attendance register. So you need to match both before you make a payment. Ensure that you're adding it as a check. Non-registration or compliance with the statutory compliances by your contractor. Suppose they are not registered in Contract Labor Act and still they're giving you, they're giving manpower supply to your client's company. So you need to flag these, because it's very important that they need to be registered and be filing their forms in time. KYC of casual labor missing no ID cards. Again, the onus is on the contractor, but as a principal employer, you need to ensure who's entering your premises and what the risks are entailed. So please look at this. Attendance leave managements are typical issues such as, in time, out time not being recorded by biometrics, or sometimes attendances are changed at the back end at the time of payroll. It's a lapse in control. Sometimes if the employee is present but still marked as half day, they have reported but marked as leave. These are manual controls that, as auditors we need to check. If it's an IT controls is very in place, you will not see these issues, but typically there are emerging corporates where these issues are seen. There are again issues around overtime. If employee is working continuously for 30 years without a break, it's you're not adhering to the Factories Act. So that you need to see. Mandatory leaves need to be given. There are issues around that. Overwriting in the manual attendance registers, red flag again, because payment is made according to the attendance register. Please check that as well. Advances to employees, whether salary advances they are eligible to take, what's the moratorium given, whether those recoveries are happening. We have seen issues around it. Advances not adjusted against salary paid is an issue again. And if there's interest to be charged on salary or loan given to employees, we have seen that it was not charged. So these are issues. In the trainings, sometimes many employees are not attending trainings, which are actually crucial. Bring that out. We are making payments to training agencies, whether they are made in line with the PO and the invoice, you need to check. We've seen issues around it. Training calendar that is planned by the HR departments many a times is not updated. Now in today's time where everything is happening online, it has actually made it simpler than to bring everyone in a particular hall. Everyone can attend, all these employees can attend from their homes like we are today on this online session. So ensure that those controls are being taken and all employees are seen. Statutory compliances, every board, the favorite item because 100% compliance is required. Non-compliances of PF, ESI, TDS, PT. Check the overtime and Factories Act non-adherences. Every act has certain forms or returns or registers that need to be maintained. Please check the acts that you are auditing, whether this is happening or not. Next, POSH policy, which is prevention of sexual harassment, important and it applies to every company in today's time. Whether the policy is drafted or not, no internal complaints committee sometimes is there. Failure to act on complaints. The financial implication is 50,000 is the penalty. And with a warning, if it still goes on, then in that case, the registration or of the company can also be affected. Next item, very important in today's time, and there is a rule from 1st June 2021 that your Aadhaar needs to be linked with the EPFO portal. If not linked, then in the ECR challan, that particular employee's name will not be mentioned and PF cannot be withdrawn. So when you do this check of the statutory compliances, please add this because we have seen these flaws in the past. And lastly, general observations, salary paid to ghost employees. Sometimes disguised employees are there. You can do surprise attendance checks in that case to ensure that we are not making excess payments. Sometimes employees can represent themselves as vendors. Check the addresses of payroll register versus a vendor register. You'll find this. GST of recruitment vendors or HR onboarded vendors, if it is seen in GSTR 2A or not, it has a financial risk. And lastly, surprise attendance checks, typically in offices, factories, where you can assemble them and have a check. Many of the times you will find that all the employees of the contractor are typically not on site. So this is a red flag. This is how a typically report looks. At the top left is how we grade the risk. Rachana ma'am has covered it very well in our session as well, high, medium, low. Next, we come to root cause of the issues, which sometimes are people driven, business process driven, or it's IT driven, system driven, that is. So you need to identify and bring it out in your report. Next is how you bring out the observation, give the background first, especially in HR, if it's linked to a statutory provision, write the statutory provision here, and then your observation around it, what is the non-adherence or the violation. So it is a systematic way of presenting. When you give the implication, give the what risk entails. Sometimes it can be a compliance risk, an operational risk, a reputational or a financial risk. If multiple of them apply, you need to give the multiple risk implications. No process is without a risk, but you need to bring out the appropriate risk so that the management can take the actions. Next, your recommended action should come in a way that is practical. Do not give a theoretical solution which the auditee will never be able to adhere to. So discuss with them, discuss at the draft report level and bring out a recommended action. And lastly, what action you're suggesting, by when the audited department is going to ensure that it is taken care of. You can give the target date after discussing with the auditee. My last slide for the day. These are some learnings that I've had over the years doing the HR audit. Very important to understand the operations of how the HR department is run, the statutory laws that apply to the client. You need to understand that in much detail because you are auditing that. So if you don't have information, you can't do a good audit. Have a clear opening meeting with the auditee, tell them the scope or take them to the scope that you are going to cover so there are no surprises for them, and sign off on the scope with the HOD of the department. Once you do that, your obstacles are lesser. Share the list of requirements with the auditee and map the data that you're receiving on the real time. Many a times you receive two files for the same item, both having different data. So when you map the LOR, you will be able to see that this particular aspect is happening and even flag it. If you're not receiving data in time, keeping your timelines in mind, send triggering vendors to the auditee. Stick to the planned timelines for fieldwork. If you extend it, you will see your complaints coming from auditee. You told me 6 weeks, but now it's going to 8 weeks. And they will cite many reasons like payroll processing, etc. So plan your audit in such a way. Communicate the audit limitations in case the data is not received even after reminders. This will reduce the arguments at the draft report level stage. Next, discuss your draft report with the HR department head first for their clarifications. The head of the department needs to be on board with you or your observations before you take it to the higher level. If you see issues which require extreme current immediate attention of the management and the board, issue a flash report, because your actual HR audit might take 6 to 8 weeks, as I said. But if it's a very important issue of reputational risk, you need to issue a flash report from your side. Next, issue an executive summary for the board, so they have a crisp reporting of what you've covered all together and give a reasonable assurance to the board here. And lastly, whatever suggestions you've given, you need to make that part of a detailed audit report to the management, include the target dates after discussing with the auditee, and track the corrective actions as part of the action taken report, that's the ATR. So before you start your next audit, all these points are taken care of and the board is well aware of the audit that you've done. In this manner, you can cover the audit of HR department in a very systematic way. I hope I have imparted some value-add suggestions from my side and you found it useful. Thank you so much for a patient hearing. If any queries you have, my contact details, you can write into me and I'll try my best to solve your queries.
So shall I share the questions or the next section? You can
yeah, it's fine. We can take some questions because I think we've gone past the time. So I don't want to yeah, I'll just stop share.
A lot of complimentary messages are coming in, sir. Thank you.
Thank you. I hope participants have really taken something home that before they join. Yeah. Okay. Hire to retire process. Missing the key element of employee retention and performance evaluation. They are key to achieving the objectives, performance development and performance evaluation in short. Yeah. Okay. Right. So when you look at employee retention, that is coming at a level of how you've done the previous processes before I retire and exit. At that level, when you're having the exit interview, if there's something you can take care of, maybe it has a financial implication of increasing the pay, for example, whether you can do it and retain the employee, that has to come in from that employee's department head as well, whether they need to take that call or not. Performance evaluation, rightly said, it is part of the employee management. So it needs to happen on a regular basis. The appraisal as part as well. I take your points. Grievance redressal. Typically, the HR has various ways of you can write into them, or in POSH as well, how these grievances of those kinds are taken from employees. Sometimes it's on an anonymous level. So because again it affects the reputation of the company. So yes, it's very important to audit those as well. So in point number 11, points taken. How do we identify ghost employees? Check the payroll firstly. You can do surprise checks from when you're going on audit site. In today's times, it's difficult, but when you go back to your client places, please, when you do factory audit, call for all the employees that are in place at that point in time and take a payroll register and do a holistic check. If there are 1,000 employees, may not be possible, but you can take certain sections. That is one way to check ghost employees. And per se, if they are part of your payroll masters as well. Because if they've onboarded there, then the issue lies at where the integration has happened at the start level. So there is something wrong in the HR. Is gratuity payment not part of scope of work? Typically, when you're looking at finance acts, like I mentioned in my session, you can add gratuity as an angle. Again, stat audit also covers gratuity. Sometimes there are group gratuity plans of LIC, for example, that the company pays. So around that, typically stat audit also covers. But yes, you can cover this as part of the financial acts that I mentioned. So TDS or Income Tax Act can be covered, and gratuity can be made part of that from a financial angle. When you look at the labor law angle, you can cover the Payment of Gratuity Act and check the clauses. So yes, it can very well be part of your scope of work. Yet another policy generally absent in manufacturing companies is absconding employees. It has a legal angle to it and therefore needs to be communicated to the employees. Special focus on blue collar employees, ramifications of labor acts. Yes, absolutely right. So when it comes to absconding employees, the risk is of data. Yes, tech companies usually have it in place. If it happens in manufacturing companies, if this is an important person who has certain IP of the company, which if leaked outside, can be a problem, then yes, the company firstly needs to go in for an FIR and they should take the legal route, given the gravity of the situation of the data that has just, or the risk that the company carries with such employees. So yes, there are policies around it when we've done the audit, and we've also seen legal action and FIRs being filed and critical action being taken by the company. So it has to be a top-down approach because there are certain costs that come with it. Elaborate vendor due diligence checking process. Okay, so if you are doing it as an auditor is one thing, but if there are certain cases where we see third-party credit agencies coming in, so they do a check from a financial angle, from a reputation angle, whether they are blacklisted on certain government websites or not. So they are doing that check as well, whether they are on certain blacklisting or certain international sites where companies have suspended them for some non-compliance, or there was some problem in their processes. You can do that. If they are non-complying with GST, again, you can check that angle. You can go on the GST website, see whether they're filing the GST returns on time. You can go on the ROC website. You can check whether the annual returns are filed on time. See, certain information you can see it's in public domain. So as an internal auditor, these basic checks also can throw a lot of things to you. Once you give that kind of an assurance, and see whether the framework firstly is built in the HR department or the procurement department of that company before they onboard a particular vendor. If it is in place, all you have to do is test check the controls. If it's not, your challenge is a little deeper. So you need to spend some more time. But yes, check what's in public domain, check whether blacklistings have happened, and check the KYC documentation, whether it's right or wrong. Financials also can be checked as part of it. If it's a tender case, they will give all this information to you firsthand. So you will have the information with you. What is the timeline for payment of gratuity? And what is the implication of non-delay in payment of gratuity? So as per my knowledge goes, gratuity has to be paid within 30 days from retirement. If that's not done, simple interest will apply. This is what my information is, but you can also check the Payment of Gratuities Act for it. On which date employee account should be blocked in system, either on date of resignation or FNF. When you look at it from an access point of view, it should be immediate, because you do not want that risk to carry on, because FNF can take time many of the times. But if you ask me, if you have to block system access or premise access, it has to be on the same date. Or if the company has set a timeline for it, like a week or so, the FNF should go hand in hand. But you need to look at it from a security angle firstly. Would you be sharing a sample IA report on HR function? See, the PPT has 4 slides just on my observations in the past, and what I've discussed with my colleagues also over the years. So you can check from those angles. I've also given a report format in the second last slide, so that can you can build your observations on that basis. And I think you then have a perfectly fine IA report that you can present to your management for discussion. Would be great if you can throw some light on the changes auditor has to undertake under new wage code. Okay, understood. So there are 4 codes basically that are coming in, but due to COVID, they have been pushed to next year. Although all have received the president's assent last year itself around September, their implementation is pushed. The states have not issued the notifications. So it's quite gray at this point in time, but if I were to approach it, I would look at it, the acts that are currently in force, you have certain checkpoints and certain critical high risk items, note them down, read the codes as they stand today, and map what change there is. So when you see the change in the particular sections, you know what you have to change in your checklist. And accordingly, you can plan the scope. When you're doing the audit, take 1 code at a time, because if you take all the 4 codes, they're around 30 acts. So that will be, doing the HR audit for times eternal, basically. So you need to break it down into specific codes and then start off. So many things are going to change basically when the code come in next year. Defining RRA, role, responsibilities, authorization, and position description is missed in many organizations. Yes, very vital for absolutely. So this is a point that you need to note as auditors. I don't think I'll comment. The point is absolutely self-explanatory. Do we have time for more? I know I'm encroaching on Jayekar sir's session. So can we take more? Because we've already taken around 10.
So only we have five more questions.
Okay, fine. Can you please scroll down? Thank you. When the scope is to evaluate minimum wages as per law, and there are state specific, don't you think auditor's role is stretched and stressed where there may not be proper database updated law available? What do you suggest? Minimum wages, just an example. Yes. So if you're doing, for example, you're doing an audit in Goa or Karnataka, and you're actually based in Mumbai, like I am, you need to know the recent changes. So as I understand, last year there was a change in the minimum wages, the rate. So you need to know these amendments that impact your audit period. So what we see is audit period does not extend a year maximum in when you do an audit. So you need to check firstly, this is an example, but all the acts that you're covering, what are the amendments that have happened? So if it's a state specific section, yes, you need to make a change. You cannot go with, if it's happening in my state, it's happening in the auditee state as well. And when you're auditing an organization which is pan-India based, your job actually becomes difficult. So yes, it is stressed, it is stretched, but that's the fun of being an internal auditor, isn't it? So that's what keeps us going. So yes, it's part of the job that we do, and we need to do our job really well. PMRPY is for small companies having employees up to 100. Specifically, I'm not according to my knowledge at this point in time. But what I can tell you is up to 31st March 19, the companies had the scope of enrolling for this. So after 31st March 19, you cannot enroll for this particular scheme. But do check the ECR challan that the contractor gives you for this particular point, and you will find if your company is paying an excess PF or not. Contractors are showing Form 11 against exemption of PF payments to government. Please guide. I don't think Form 11, I know what you're trying to say, but it does not exempt you from PF payments to government is in my view, but we can check this from an HR or you can check the labor law consultant's view on this as well. But you're right, I've seen this in previous cases, and there are people who take shelter of this. Whether EPF is mandatorily to be deducted to the extent of 1800 for whose wages salary is exceeding 15,000, and if deducted, employer's contribution towards EPF is mandatory. Yes. So more than 15, it is mandatory. I think before that it is ESI based, but if it's crossing 15, yes, it's mandatory. A company was having a very good post-retirement medical benefit scheme, payment of inpatient bills to the hospital directly, due to which so many employees continued in the company, okay. But now the company has taken an insurance policy and the inpatient bills are now being paid by the insurance companies, okay. In the new scheme, the retired employees facing problems, whether the company can change post-retirement medical scheme on its own, and whether internal auditor can question the management. See, it's an internal policy. Yeah, absolutely. It's an internal policy, and what the board needs to take a call on is their decision at the end of the day. If it's a documented policy, us as internal auditors, we can only check the policy. We are not there to actually look at it from another angle, but we have to ensure what policies are in place, what controls are in place, whether they're followed or not. And if certain major changes like this are made, whether it has the approval of the board and the audit committee in that particular aspect, because 100% it will be part of the minutes. So as internal auditors, we need to ensure whether legitimately it was changed as a policy or not. Now, what is being changed is in the company's hands. We cannot comment more on that. It's a very qualitative aspect, sir. In case of left employees, can he withdraw PF from account after 2 months afterward he joins in another company with the same PF number? Yes, he can, but there's a tax implication. If you wait for 5 years, typically PF withdrawal is tax free. But if you withdraw after 2 months, obviously as an employee, you have to pay the tax on it, and you can give it to your next employer and use the same PF number going forward. So I think that answers your question. I sincerely hope I've answered everyone's questions to the best of my knowledge and capacity. Thank you so much.
Yes, sir. Presentation visible. Sir.
Yeah, so should be, I'm also audible,
Yes, sir.
no?
Audible.
So you can, yeah, okay. Thank you very much, Samit, for that excellent presentation. Today we'll start off with the topic which has been assigned to me. Now we need to look at a lot of portions in data analytics, but what we'll do is we'll just make it as quick as possible and keep it to the minimum so that you could go through the demonstration to guide you as to how you could make use of these various possibilities uh, in this data analytics which we are talking about. So what I'll do is let's not get too much into the definitions, but basic question is, why do auditors need data analytics? So the answer is very simple. We've been working with a lot of ratios, particularly the external auditors when they do their due diligence before accepting an audit and various other things. When they do, they work with the standard ratios. Obviously, internal auditors also work with the same ratios or maybe a few extra ratios. The ratios typically have been what we studied in school, like A by B. It's a ratio. We call it a fraction, but it's a ratio. Or A is to B is as to C is to D. That's also a ratio. But those are, I wouldn't say obsolete, but today, since we have computers, you got a lot of other facilities. You can start looking at a whole lot of different facilities which are available, where you could start using what is known as mathematical modeling. But of course, we changed all the names now. So I just put three definitions, very simple. Wikipedia is like more like a book, it's like a dictionary or an encyclopedia where it says something. The text, I mean, a storybook, a lot of people write business stories now. So competing on analytics, an old book, but doesn't matter. There's a lot of new books also. They also talk about statistical and mathematical modeling. And of course, we have the last one, which is Gartner, which is a business, I mean, it's like a consulting firm, and they also talk about the same thing. So what I would do is I'll just quickly run you through this analytics portion. Now, these are all definitions are not very important, but just to set the tone. One is we use the data analytics in whatever we do. So what we're trying to say is internal audit is a very huge area because we mostly focus on the financial aspects, but you can focus on the other aspects also, like the operational aspects. You can look at the strategic aspects, the governance aspects. So you have to use a lot of those analytics or methods rather, formally, when you do that. Then second is you want to add some value to whatever audit we are doing. We say seat at the table, are we adding value, etc. So that's again another area we have to look at. And then we say we bring this technical assistance to our clients. And as you all know, internal audit has two types of assignments. You can do it as an assurance or you can do it as a consulting assignment. The consulting is probably getting bigger and the assurance is, okay, it's also there, but that has become more a routine affair. Now, again, very quickly look at it. We look at analytics in all phases of the audit. I'm not going deep into it, but you can just take my word for it that we use it right from planning up to the report writing. Then technical assistance, we don't have to worry too much on the technology because today we're going to use only spreadsheets. Then internal reporting and oversight, yes, that's also there and we need to look at that also. And then we look at the enhancing the effectiveness of the audit. So I'll get the laser pointer going so that I can at least highlight the points. It's okay. We will just manage without. I'll just move the mouse. So anyway, we have got this effectiveness of the audit where it's very important because normally a client will ask you, particularly consulting, if I pay you X amount as fees, will I get a 20X saving, 4X saving, 5X saving? And then we also continuously capture the trends of the business. Anyway, these are just the general points. Where I want to spend a few minutes is one of the lessons we learn from clients, whether they're large or small, so we are segregating clients into two categories. One whose businesses are established over many years and they're very comfortable. Probably they have huge land banks and income from the business is not probably what they're looking at. The other category is not startups, but even they could be old companies also, but they are looking at profitability, pushing new products, changing trends. So they are a different group altogether. So that's the two categories we find in India, or generally in the eastern side, eastern countries. So one is a cultural change. So if you're going to talk of internal audit as anything apart from financial audit, they all get worried. So why are you interfering? What do you know about operations, etc. So this is one thing which you'll need to bring to the management, that today finance has become a back office. That's why any outsourcing company, the first thing they do is they get rid of the financial work. Then they get rid of payroll. Then they get rid of billing, settlements, insurance. If you look at it, all of them are financial. They don't actually outsource the manufacturing. Of course, they do now. They take it to China or India. But culturally, they're a lot different. For instance, a company doesn't make, say, jam or pickles, and sell it to somebody else to put a brand and sell it. So they hold the manufacturing. So cultural changes are something which the internal auditor and his marketing effort will have to do. Then, how do we convey the reports? You saw a report from Samit a few minutes ago. You'll have to bring value. So the person, for instance, I can just tell a quick story. You can have employee attrition, you can have a drop in sales, you can have customers deserting your organization. But if you're able to put all three together and tell them, because of employee attrition, which has not been filled up, the places have not been filled up, we are experiencing not only a drop in sales, but also losing valued customers. If you can bridge all three together, then they will start attending to the employees who are leaving. Otherwise, what they'll say is, okay, employees are leaving, ask the existing employees to manage. They don't see three different things like sales, marketing or customer losses and loyalty program losses, and the HR losses. Unless they see it all together, they don't get an insight. So internal auditor will have to do that also. Buy-in is, of course, everybody talks of money. Finally, everything is money. If there's no money, what I said is bringing value. You got to bring some profits or some at least a reputational value, goodwill to the client. Now we come to the right side where we're looking at skills. I don't think it's a shortage. It's just that we need to re-equip and learn new skills. I would look at it this way. For almost 4-5 decades, any Indian car had a gearbox and a clutch, manually changed gears. Now today you buy automatic cars. You're shifting up. So how long did it take? Not much. So we need to move on. So any new technology will bring some learning requirements with it. So I won't take it as it's a shortage, but can be bridged. Implementation is always a problem because we want immediate results. Because we just look at some Excel, we want to have a formula built in somewhere. Now that's not how it works. We have to learn a little bit of this statistical modeling and accuracy of the data, what we call integrity, or is it good data? Or are we working with forged numbers, fabricated numbers? Generally, most of the organizations, most worldwide, not India particularly, figures have to be smoothened out. The reason is sometimes they don't come in on time. They got too many locations. There's too much of data to be kind of compiled together. Okay, without mentioning names, you go to a large organization which has a few lakh employees, or even say close to a lakh of employees. They don't have an accurate head count. Actually, I don't know how it manages, but there's a HR department. There are employees. There are resignations. There are PF accounts, but nobody knows the exact count. If you take from different locations, we know this is true, but we have a threshold. It's all tolerance. You can manage with that. Now, what we are talking about is analytics, which is reliable. What we mean by sustainable is, can I repeat it again and again? And can I depend on it? Or will my management find there's a big hole in what I've been telling them? Now, this is where the internal auditor, those of you who are going to use this analytics widely in your audit, we'll have to think of it this way. One, you're a catalyst. Now, what do we mean by a catalyst is you're driving the change. People will laugh at you. So if you have time, you could read up. There was an allegation by the Infosys employees that Infosys was fabricating its financial statements. The SEC gave it to some consultant, and within a month or 2 months, I don't exactly remember, it's a very short time, they said there's no fabrication. So out of interest, if you read the case, whatever you're going to see today, the same methods were used by the consulting company. Now we need to accept those. That's what we mean by the catalyst. You bring new things in, you're challenging traditional, whatever liquid ratios or debt service coverage ratios. Will people listen to you? So that's the first part. Second is you got to sell this idea. You got to set this strategy right so that we say you get a seat at the table. Otherwise, the internal auditor is not a respected position. Now, steward is completely different. Now you're taking care of, your steward always takes care of things, like he's a steward in a farm or in a warehouse or a hotel. Now, what he does is he's protecting stuff, he's protecting the money, the assets, the people. Now, you take a lot of stewardship rights also. And then, of course, the last one is you're also there for the execution. So you're the operator. If you get your catalyst and strategist right, everything else will happen correctly. Now, these you don't have to worry. This is just one of those slides which is mostly for beginners, but you're already there. So you've already been looking at it. You know what it means. You could look at this fairly fast. Now, see, this is what today the world is talking about when it comes to internal audit. They say we need purple people on the team. Purple people are auditors who work with technology. So to make it very simple, let's look at it as technical skills, data analytical skills. We have the business knowledge of business, and then the report writing. Of course, now the new name is storytelling. Now, okay. Now, how can a single person do all these? Yes, maybe you can have teams. Like you can have teams doing it. But if you're going to move to the next level, where higher levels, where you're going to have your assignment in charge or the engagement partners or directors or whatever, they need to have at least some capabilities in all these areas. So I'll just quickly run through this. Now this is, that's why we say internal audit team may have, usually they have accountants, cost accountants, company secretaries, they'll have lawyers, you may need engineers, you may need doctors, you may need, in fact, if you go further down, you may need intellectual property right people, you may need digital rights management people, because if you're doing content management for a publisher or a music site or a movie distribution, there's a lot of things where internal audits do not work with vouchers and the traditional way of bookkeeping. Their records are all different. There are no stores ledgers. But then advertising revenue has to be assured. We have to take care of whether the right films are screened with the right scramble code, the code being given for the right payments, what we call distribution rates. Okay, now let's quickly look at the testing part. Now the testing involves all these involving all these quality assurances, procedures, etc. The SQL, say I just brought in the SQL. Now you don't get worried about the SQL. It may have to go to big data, it may go to Hadoop, it doesn't matter, whatever it is. It's better to know some basic querying language. It doesn't have to be SQL, but SQL is the easiest, so you can learn that. So if you come to the data analysis, you're talking about modeling of the data. Today, data models can be built very easily because of the ready-made software available. We could use that. The traditional statistical skills today are called as, originally it was statistics, then it became business statistics, and then they separated the mathematical statistics, and then they went on to the statistical analysis, then it became data analysis, then it became data analytics. Now today it's called data science. So whatever the book is, it doesn't matter. They're all the same, starting from your statistics, plain statistics or business statistics, up to your data science. We're talking the same thing. Change all the names. It's just fancy names. Like HR becomes talent acquisition. So Those days only musicians and actors, we say talent acquisition. But today HR guy are appointing a peon, there's a talent acquisition team. So just change the names, content doesn't change much. Then of course reporting software, all the graphs and pictures and whatever we need, they're also readily available. Now we have trouble on the right side. Right side has got this business acumen. Now we know many places, we know lots of places where you pick up or maybe a company has picked up a retired employee who has worked on, let us say, a coal-based thermal power plant. And then he's picked up as an engineer and put into a non-conventional, say, wind energy company. He will never fit in because his knowledge is completely different. Now, that's where the internal auditor has to do a lot of work because sometimes the employees themselves don't fit the role correctly because shortage of employees, I mean, simple as that. So that's what's happened. So here we're talking about technology, the high level perspective, and a knowledge of business, which goes into both understanding the business and reporting it. Now, different companies will be there. Like hospital reporting to a doctor is completely different from reporting to a maybe energy company. That's completely different from reporting to a freight or logistics company. So all these things is what we need now. Of course, it's a big picture. We'll take a small part of it. Now, what I'll do is I'll just go straight to the last part here where we have a centralized model. Now, throughout the Indian computerized scenario, starting from your Lotus 1, 2, 3, and whatever we came up to the Excel now, we have always been working in pockets or silos. Every department has their own sheets. Costing department, they do something, spreadsheets. Somebody else, they do something else. Financial accounts, they do something else. Now, instead, what we're saying is, can we build an analytics unit for the organization and centrally decide what analytics is to be done by each of the different areas, business-wise, function-wise, and so that you can integrate, you can produce consolidated MIS, you can do a lot more work. So the centralized model is what we are trying to push. Of course, ERPs push it to the business intelligence and so on. Now, what we'll do is I'll take you straight to what we're going to do today. Today, the class is a bit restricted. See, what we are trying to study is called statistical modeling. Now, as I told you, ratios A by B is to be have given way to a slightly more mathematical way of doing things. So I've been asked this question many times: do I study mathematics or do I study statistics? Answer is you have to study both. There's nothing. There's actually it's mathematics, which one branch of which is statistics. So if you are doing statistics and then we talk about probability or set theory, then obviously you have to go back to maths to find out what it is. Let's say I don't want to learn. If I don't want to learn, no problem. There are tools available. At least you must learn how to use the tool. I mean, that is important. So what I'm trying to take you through is a simple thing like, do we need statistical modeling? The answer is yes. Do we need them in risk management? The answer is again yes, because most of our risk managements are vague questions. You know, like sometimes we ask, was a quality check done when the product was received? I mean, that's like an English statement or any vernacular language statement. Answer is going to be yes or no. But then, how reliable are these testing inspectors? We got night shift, day shift, different people working. One fellow is very, I mean, he's really devoted to his job. The other chap is very careless. Another fellow is corrupt. Another fellow doesn't even turn up for work. How do you rate these inspection reports from all these different people? So that's where your statistics has to come. We talk about the spread, the reliability, and so on. Now, auditors worldwide, papers are being published. A few people, youngsters learn, but I guess they never come to practice. So, but now we are trying to focus on this to bring it into our the practice element of it. I've taken a very simple case. Now let's think of a situation where we got a mouse where we have got the weight and we have got the size. Take it at face value. Don't worry about the audit right now. Now, since there are two factors, there's a weight and a size. Let's say we collected data at random. I mean, we didn't know they were related. We're not supposed to know. So we collected the data and we plotted something like this. This dot represents one mouse. 1 unit weight, it was 1.5 units size. This mouse was somewhere 1 3/4 unit weight and so on, maybe 2.5 units size and so on. All these dots. Now what you do is you kind of cluster these up. So you look at a relationship. So basically what you're finding is as the weight increases, the size of the mouse is also increasing. As the weight decreases, the size of the mouse is also reducing. So this we have concluded. Now is this important? Very important, because sometimes you have to work on a ship where you're loading in tons displacement. Now, if you have lighter cargo, then your volume gets full, then you have to stop. If you have heavier cargo, the displacement gets full. Even if there is space, you still have to stop. So as an auditor, each of your clients, or maybe in the same client's work, different things will have different relationships. You have to establish it. So that's the first job. Now, once you establish it, then we call it a model. Now, what is a model? The model is, just don't worry, it's a regression equation, but just don't worry about it. Now, we have got some answer here which says some point one. Don't worry how it came. That's what you'll be seeing in a few minutes from now. And then there's another 0.8. Again, it's come through some calculation. And then we have the unknown, which is the weight. So somebody comes and tells us, look, I can tell you the weight of the mouse is 4 units. Can you give me the size? You apply your formula, you get your answer, and that will be accurate. So if you see what we have done here is you substituted the 4 and you got a 3.3. Now the next question is, how accurate is my prediction? That depends on our observations and the line we fitted. That it's called a straight line, but doesn't matter. It's some kind of a trend which you have fixed, and how much deviation did we notice from our observations and this equation? So question generally the audit committee will ask you is, look, how do you know this equation is reliable or sustainable? We said, can I depend on it? And next year, will it be the same, year after that, etc.? Then we also know that sometimes when we don't work with straight lines, we work with curves also. That's also the regression can work with curves also. So again, you have equations. So it's only a drug and some hair growth, but doesn't matter. So what you find is you keep on taking more and more of this, whatever hair oil or some vitamin or something. It doesn't actually have a value after a point. So this, again, if you plot the data, we get equations. The next question, who's going to capture the data? Who's going to build the model? Well, auditors can do it, or they can take models developed by researchers, or you can put it across as what we call the research projects. So colleges or universities can take it up and do it. Now, the whole thing is when you're doing this modeling, we need to know the objectives. That is there in every audit. What am I trying to do? How do I bring value to the organization? Then we look at the predictors and so on. So once we look at our predictors, there are stories, you get the data, form your data set, build the model, which you'll be seeing now, and then you start predicting. So that's how it's done. I'm making it as straightforward as possible because I just end with the last thing, where if you looked at machine learning or making a lot of noise as auditors, we have to look at machine learning. We'll start with the statistical modeling. And maybe later sometime we could look at pattern recognition, you could look at artificial intelligence, you could look at data mining. There's a lot of things we need to put together. We'll start with the simplest of this, statistical modeling, which is very reliable. Why do we say reliable and why do we say important? If you saw the recent Caro, where they said you need to specify, kind of give your opinion whether it's really a going concern or not. Institute has given a guideline, traditional ratios, nothing wrong, perfect, but they are age old. Manipulations are possible because the days when the ratios were written, we had current assets or we had short-term assets, long-term assets, current liabilities, etc. But today we have got some current asset and something called non-current asset, and there's something which is long-term. Now, nobody rectified those formulae. So your college student learns current assets by current liabilities. He sees a printed balance sheet, he finds something called non-current assets. Then does it go to long or short? So we don't know. So these are the issues we are grappling with, where the world is moving on, but we are still using like obsolete, pencil ticks. Today we don't use them anymore. So we're still doing the same thing. So I'm moving away from standard ratios to a statistical model. Now these models, Deephika, who heads our analytics division, and she's a colleague and she heads it at CMK. Now, she'll show you two sets of statistical models. They are done by others. It's not done by organization I work for. These are statisticians, mathematicians, researchers. In fact, it has come from Stanford. It has come from different places. We can also do it. I mean, take it up as a research project, you can do it, but you need to pick up data and do it. One is on the falsification of books. This is what the SEC used when there was an allegation of fictitious falsified accounts. Two of them are there, Montier Score and Benish. And bankruptcy indicators are what I told you, in Cairo they have brought it. Generally, we take these from European and US standards, but we don't copy the methodology of arriving at the answer. We just copy the question kind of. Is it a going concern? Now we are learning the methodology. So we're going to look at some other calculations, statistical calculations to help us out with this. So with that, what I'll do is I'll hand it over to Deephika. So she will explain these ratios and she'll go slowly, she'll explain it, and she'll also run it to the spreadsheet and explain it to you. Deephika, you can take over. You had to unmute your mic.
Yes, sir. I was sharing my screen anyways.
Okay.
Yeah, just a moment. So before we jump into the models and how to use the models in our audit, I will give a small prelude to what is this statistical model and how it is relevant and how statistics is used in data analytics. So that is a very important thing which we need to understand. So the fundamentals of both audit as well as data analytics is going to be statistics. So whatever we do in audit, like for example, let's say a three-way match or a reconciliation, or let's say we are doing an outlier testing, all those are also statistical techniques which come under quantitative model. So quantitative model means it's going to be arithmetical model which we are building based on a set of data. So for a particular population, we are applying some techniques and identifying some representation of the test, data. So that is going to be called as descriptive statistics. That is wherever I have set of data already and I'm only taking a representation from that data, then that is descriptive statistics. Essentially, this is what we use in our day-to-day audit. Maybe we are not using by this name, but what we are doing is descriptive statistics only by using a lot of different quantitative models which we build based on, let's say for a GST 2A reconciliation, we are building a model like this. I have to check this, I have to check this, I have to check. If it is not checking, it's an exception. If this amount is more than this, then it is an outlier. So all those will be our quantitative models, and we have exploratory data analysis where we are just trying to identify, is there any pattern? Is there any approval missing? Is there any specific exception I have to look at in this particular data range? All that will come under exploratory data analysis where I don't have any specific objective, but I just want to pivot the data and see how my data is. So those will come under exploratory data analysis where we are using statistical techniques already. So now in data analytics, both descriptive statistics as well as inferential statistics is going to play a very major role. Both are data analytics only. So in inferential statistics, I'm going to infer something which this data can be used for future. So more of the predictive analytics will come under inferential analytics where I'm using the base data to derive at something which could happen. So major techniques used for inferential statistics is the decision trees, regression analysis, and clustering. So decision trees, I think as part of CA curriculum itself, you would have learned how decision trees work and what are the layers of the tree or the branches of the tree, how based on different parameters, the tree is going to branch out and give us decisions. Now with the help of statistical tools, like for example, we have R, we have Python, we have SPSS. So these are all tools which are helping us to build complex decision trees, like decision trees with 5,000 branches or 50,000 branches. So that level of capability it is giving us. Next, we have regression analysis. So this is going to be our primary focus for today because this is going to be very simple, straightforward, and lot of practical use. So now decision trees and regression trees are going to be the base of machine learning, which is the keyword or the buzzword which we are using on every automation process or every RPA process. So next we have clustering. So here also, it is also similar to decision trees, but the branches are not going to be defined based on our supervision, but it is going to be based on patterns identified by system, based on the attributes the data is going to throw. So it is going to be a little advanced way of segregating data, identifying patterns. So lot of our AI tools, random forest, and we have all these neural networks, all this will come under clustering, advanced clustering. So today we are going to see regression analysis, which is going to be the base of financial modeling or financial risk research, financial risk assessment, whatever name we are talking about. So how these models are built and how it is evolved. So first, for building a model, we need historical data, because we need to feed in system with some information based on which it is going to give some output. So first, I need to identify my historical data. What is the data I'm going to use? Next, I need to use the algorithm, predictive algorithm. So what is the predictive algorithm? So it could be a decision tree, it could be a regression tree, it could be a clustering tree, it could be random forest, it could be neural networks, it can be any statistical technique, okay, which is already built in. So these are all workflows only. It does not have a specified fixed equation already. So workflows are already defined by statisticians and it has been commonly used, so that we have to apply on the data. So we apply those algorithms on the data and then we identify and build a model. So maybe for a particular set of data for a particular decision, we may use more than one model also. So depending on the complexity of the decision, we will be using data models, like different algorithms, and then we will finalize the data model. So once the data model is finalized, what's the next step is we have to test the model. So what we'll do is, based on, since we are working with historical data, already we know the outcome of the data. Let's take loan default prediction as an example. So in my historical loan portfolio, I already have data whether the loan was defaulted or it was settled. I mean to say, the customer was a good customer and the loan was fully repaid. So already I have the information. So now I have a predictive algorithm and it is also has given me one output. So what will be my testing is, I will test a predicted result as to the original results, and then I will compare. So I will compare and build a classification error matrix where I am classifying my output into whether my output was true positive, that is, as per my algorithm also I got the right answer. As per my original historic data also I got the right answer. Then I call my output as true positive. Next, I have false positive. What is false positive? I have true answer was negative, but in my predictive algorithm, it gave me something, gave me that it is positive. Then what happens? It becomes a false positive. So similarly, we have false negative and true negative. So now, only if my true positive results are going to be like, let's say 90% and higher accuracy, then I will say my my algorithm is worked well. That is, it is giving me good results, right? So I will keep iterating and modifying my algorithm to the time or till the time my data model is giving me more than, let's say, 99% accuracy or 98% accuracy. Till then time, I will be reiterating and I will be going and modifying the model. So after this, what happens? Once the data model is ready, my algorithm is giving true positive results, then I will go to my new data. So, okay. So once after this, my model is ready to be implemented, I put in new data, it will give us outputs, and I can assume, or I can assume that it is correct. Because since it's a statistical model, there is a risk of error. So we call it alpha. So the risk of error is there, always 5% risk of wrong prediction is there, but still we'll have something to decide on. So we are not forecasting based on any assumption, biasness, or just some gossip, but we are having a proper model based on my historical data, which is having more than, let's say, 98% accuracy to predict some output, and then basis which I'm going to take decision. So now, as an auditor, are we all equipped to do this? Many of us could be, but some of us, we are just in the starting phase. So first, for today, we are going to see some models which are very easy for adoption. So for that, what we are going to do is, we are going to see first basis of regression and how regression works. So regression, basically, we have two categories of regression which we use on a regular basis. One is the linear regression, and then we have the multilinear regression. So we have a dependent variable y, and we have an independent variable x. So we are going to see the impact of this independent variable on this dependent variable. So what all factors are going to affect? So in our previous example, loan default model, let's say I have an independent data point, which is going to be, let's say, my customer's credit score. It could be my customer's employment, whether it's in government or private, my customer's number of family members having like income generating family members. Then it may be, let's say I have agri sector loan. Even my rainfall data will become a independent data which will influence my output. So like that, now we have to identify all the variables which are going to affect my output for my decision. So once I identify all that, I have to accumulate data for all the independent output. Then I have to try building the regression equation. And after that, I will use that regression equation to predict my output. So when I have one dependent variable and one independent variable, then I call it linear regression. Okay, it will be like a straight line. Multilinear regression is where I have more than one independent variable affecting my output. So mostly we'll be encountering situations, real life situations, which is going to be multilinear regression only. So now, let's say I want to analyze financial statement risk. I have to analyze financial statement risk. So what all data I want? I want to take financial statements of, let's say, 20,000 companies, 50,000 companies, then accumulate that result. After that, I have to build a model. I have to see which all is going to impact my bankruptcy, which all is going to impact my profitability. And then basis my objective, I have to filter out, and then I have to build the model, right? So now, since this financial statement risk or financial risk assessment is common across the globe, and it is like time-tested techniques are already built in, which we can just adopt. So already sir gave the slide about bankruptcy indicators and the insolvency, bankruptcy indicators and falsification, okay, manipulation indicators, where we have Benish M score, Altman Z score, like that. We have different statisticians who have done this analysis, identifying what all are the independent variables, identifying what is the, for a particular objective, what for a particular objective, what all are variables which will impact my decision. Then they have collected data. Then they have done all this iteration of building this algorithm, and they have finalized the data models. So most of these models were built around, let's say, 1980 to 2010, before, in that time period. But those are all still relevant for today also, and it is used by a lot of companies, mainly for forensic or even normal audits. They are globally well adopted and time tested models. So we are going to go and see some of the models. The first model which we are going to see is the Benish M score. So Method Benish was a statistician who built a 8-factor model, which is going to identify if there is a manipulation in my financial statements. So in my financial reporting, is there a window dressing that is done, or is it actually correct financial statement that is published? So for that, he has built a model which is having 8 parameters. So we'll go into each parameter, but before that, we will see how the equation is built. So now if you see, linear regression will be y is equal to mx plus c. So multilinear regression will be y is equal to m plus x1 beta, x2 beta, like that. We'll be having different weightage attached to different numbers, right? So different variables. So we have a constant is going to be minus 4.84. Then we have weightage 0.92 DSRA. So DSRA is the index or the independent variable yes identified. Okay, then we have gross margin index is the index yes identified. So I'll just share the screen, 1 minute. Share the working of all these formulas. So he has already built in each weightage for each variable. So there is 8 variables that are impacting my manipulation index, which covers all major P&L and balance sheet items with a particular weightage, which comes to a particular number, and already the interpretation is also built in. So now the interpretation will be, if your model answer, okay, is greater than minus 2.22. Okay, so around 70% of the companies we apply this model will have a clean balance sheet only. That is, the result will be greater than minus 2.22. Then it means unlikely there is a profit manipulation. But if it is less than 0.22 to 1.78, then there is a likelihood or a possibility that the financial statement is manipulated. And if it is going to be less than 1.78, then almost like high probability or high likelihood that that balance sheet is having window dressing. So like this, we have interpretation for the particular model also. We have the equation also, which is already derived. So the only work we have to do is put the new data in, and then get the prediction. So for this, since it's going to be a simple equation, which is going to be based on financial statements, we can directly do it in Excel. So in Excel, I'll just show you what we have done. So we have taken Schedule 3 balance sheet as such for a company for, like, let's say we need a trend, right? So I have taken 5 years balance sheet. I hope the Excel screen has changed and you are able to see my Excel.
Yes.
Yes. So I have put in the balance sheet and P&L for one test company, which is going to be for 5 years balance sheet. After that, all of us would have had this ratio analysis sheet where we have all the ratios listed and how it works, so that we have a quick view of how the company's performance is. So same like that, we can have these indicators, financial indicators of bankruptcy and manipulation and insolvency also included into our analysis, so that we are having a wholesome view of what the financial reporting is representing. So, and now even for as part of statutory audit, if we see as an external auditor, we have CARO reporting, which includes that we have to do some analytical procedures and ratio analysis before we identify and certify going concern. So these things can be used also. These things can be used also for indicating going concern. So now what we have done is, so these are the 8 categories given by Benish. So one is days in sales receivable index, gross margin index, asset quality index. So like that, for each index, he has given what are the areas of the financial statements we have to consider and what each represents. So after that, we have just substitute, we need to just substitute the formula. So once we substitute the formula, so all my links go back to the balance sheet for the current year and previous year. So we will know what is the, how the balance sheet has moved, like how my receivables have moved, how my cash has moved, how my current assets have moved. But these are the specific indexes or specific areas identified by Messr Benish, who was the statistician for building this. After that, he has iterated and built the equation. So the equation we already saw here, which was having different weightages. So just what we are doing is we are substituting that weightages here. So if you see here, just a moment, I'll zoom in further. So if we see here, we have the same substitution here. So minus 4.84 plus is the constant, plus 0.9 times X1. X1 is going to be days in sales receivable index, 0.528, the gross margin index. So same thing we have just substituted the formula and we got the answers. So now to interpret the result, we have greater than minus 1.78, only then there is a then it is a safe zone. If it is less than 1.78, then it is red zone. So all our answers are actually greater than minus 1.78. So actually we don't have a problem. So like this, we have next score, which is Altman Z score. So what is Altman Z score telling us is, it is also again going to be a no, the previous one we saw was a manipulation indicator. Now what we are seeing is a insolvency indicator. So it's a insolvency indicator. So it is working more on the cash flow related variables. So he has not given the index names like Benish gave, like DSI, GMI and all that. So we have directly 1.2 times X1, that is working capital divided by total assets, 1.4 times X2, that is retained earnings by total assets. So this is the equation given, which is taking more of cash and bank and liquidity related ratios, which is substituted to identify whether the company is having enough liquidity and whether they are able to sustain the future cash flows, whether the cash flows generated by the company is sufficient to have going concern. So Edward Altman was the statistician who built this. So we have the same way, we have the ratios, and it is going to be a simple ratio of working capital by total assets, retained earnings by total assets, which is almost straightforward financial statement figures where we don't need to have a lot of further formulas or analysis. So we have done that for every year. Then we substitute with the equation, which is the regression equation given by Edward Altman, and we have the answer. So here also we have the interpretation. So if you're financially sound, then your score, Altman score, will be greater than 2.99. So currently in the balance sheet which we are seeing, all our score is greater than 2.99. So it means the company is safe. Okay, it is not nearing bankruptcy. So if it is in the red zone or the distress zone, if the answer is like less than 1.8, then what will happen is there is a possibility that next year my company will not have enough liquidity to survive. So that is an indicator, and that's what this predictive model is giving us. So like this, we have Olson's O score. So again, this is also a bankruptcy indicator. So here also we have similar index. So for Olson, we have 9 variables. So 9 independent variables which are going to impact my O score. So my 9 variables are given here. So I have a total assets by price. So here it's taking even the country's economy in place. So your consumer price index is also one component of the index. So there's a weightage which is attaching to my economy and comparing my economy's prospect to my company. So my equation is like, in the current economy, in the current inflation, will my company survive for the forthcoming years? So that's how Olson's O score works. So we have total liabilities by total assets. For that, we have a coefficient, that is the weightage of 6.03 times. So like that, we have 9 indicators, and for 9 things, we have different regression weightages, or the coefficient value, or the beta value, we call it in regression, which is again substituted, and we get a O score. So here, if we have an answer which is greater than 0.5, then it means the firm will default within 2 years. There is a high probability that the firm will default in 2 years. That is, they will not be able to, like, liabilities will be more than assets within 2 years, and they may default. So if such indicator is going to give us a negative answer, that is, it is suggesting, okay, it is greater than 0.5, and in the company which we have faded in this data, it is going to give an answer which is greater than 0.5. Then we have to see further prospects, whether they have any new capital induction, or there's a new partner or new JV, whether the company will really having any prospects of going concern, or is there a financial distress and there is no likelihood the company will continue. So like that, for further decision making and further strategy building, it will be very useful when we are using such models. So these are also part of, though it is like we can easily classify all these into our analytical procedures. Same thing only is covered in data analytics also. So because both are based on our statistics. So next we have a Montier C score. So Montier was James Montier. He built a 6 independent variable model for multilinear regression, which is again a manipulation indicator. So manipulation indicator is window dressing basically. Is there any area where I have manipulation. So here one major advantage in this model is I can identify which area manipulation is there. Like for example, which all area. So I have this I have my 6 variables which are derived from my financial statements. And for each item, I have a formula to substitute basically. So that is based on percentage of change from last year. So once I do that, what it says is, if my answer is positive, okay, I have to attach 1 point to that. Okay, the more points I get, it means there is more adverse effect. Okay, so the less points I get, I have more better effect. Okay, I have a financial strength when my answer is closer to 0, and more adverse manipulations when my answer is closer to 6. So now I directly know which all ratios are contributing to positive and which all ratios are contributing to negative. So all the areas which are contributing to the positive is the area I have to go back and verify whether there is any manipulation. So I have further indicator in this Montier's C-score. But the advantage here is this is not a direct predictive model. It is based on previous year's financial statements only. So this is only a quantitative model. That is without any equation. It's directly only substitution of normal ratios. So that is Montier's C-score. So without taking much time, I'll just cover Piotrowski's F-score. Okay, so here he is going to give the financial strength of the company. That is how strong my financial statements is, whether it is liable, like if it is part of due diligence assignments basically, whether the company is worthy to invest or not, whether I can make an investment on this company or not. So it shows the financial strength. So in our, let's say, Olson and Altman bankruptcy indicator, we are seeing the financial distress. Here we are seeing the financial strength. So there is actually a lot of difference from seeing the strength to the weakness. So here I have 9 areas. So this is also a direct plain quantitative model, which is not having any regression equation, but it has different parameters. And for each parameter, there is a weightage. So based on the weightage, I assign 1 or 0. Okay, so if the company is having closer to 0, then it is having less strength. If it is closer to 9, it is having more financial strength for investment. So that's how this model interpretation goes. So this is like very simple, straightforward, rich inputs providing models, which are like very easy to implement also. So with this, I'm bringing this analysis presentation to the close. We'll take some questions and we'll be happy to address any doubts. So the same thing is compiled in the PPT also, but since we were lacking time, I directly went it took through the Excel for the answers. Yes. Also, you have anything to add?
Selva, compiled all the questions.
I have compiled some questions, sir. Okay, which
please.
I can also see the chat box. I'll share my screen.
Yeah.
Yes.
Yeah, is my screen visible? Excel sheet.
How many questions, Selva?
4 to 5 questions, sir. And
4 to 5 questions. Already, madam, so tired.
No, sir, not at all. Not tired to answer questions at all.
Thank you so much.
11 to 15, and the rest we can see it in chat box.
Sure, sir. Can we see some models from real life experience in O2C? So actually, the models which we took for today is financial statement models. For O2C and P2P, mostly we use quantitative models because it is the data generated is going to depend on the business process and it cannot be generalized across industries. So mostly for order to cash and procure to pay, the models which are built are quantitative models only. I have a lot of real life experiences on quantitative models on O2C and P2P, which is like very, very effective. So statistical model, we don't have accredited models as such, but we can explore. We can explore research papers and see whether we have anything to adopt. So next we have, there is many platform offering data science. Please suggest some good course platform. So actually, I don't want to advocate any platforms here, but yes, you can ping me separately. We can discuss different platforms which are available. So basically, I can tell you can take Google Analytics course, Udemy, lot of courses are there, which is very, very useful and we can adopt. So accredited universities also are providing lot of courses, but actually whether that is for auditors, if you ask, no. It is purely for technical people where it requires a lot of experience for you to adopt those models into our audit scenario. Then we have, is that template for Benish model? We can apply from balance sheet and check. Yes, Benish model. So I have built the template for all the 6 models. I have already shared it with the coordinator. So that is available. I am actually giving it. So even if you like, you can mail me also, I can send it across. Not a problem.
For that Excel sheet. So I hope it can be shared with the members. So
yes, yes, sir. So that's a test data of just some listed company balance sheet I took. So it's not any confidential data. It is we can use it. So then please suggest reference software tools for models regressions as discussed. The series models have specific correlation to identify. Yes. So actually Montier score has specific correlation to specific areas. So others we cannot specifically identify into the like what caused that. But still we can actually have an idea which number is like deviation, which number is or which weightage is causing a maximum deviation. With that we can go back. Actually it is very useful. I have we have used this in forensic audits and we have identified exact areas of fraud where we did not waste a lot of time in going to different areas and then coming and finding this is the area where we have fraud. So that type of references we can get from these models. So regression models in Excel sheet itself, like if you want to build a regression model in Excel, there's analysis tool pack. You can explore this add-in. It's an inbuilt add-in in Excel, which you have to enable. It's called analysis tool pack. Using that add-in, we can build regression models in Excel itself. So apart from that, you can use R or Python or SPSS, R, Python and SPSS for building regression models. So R is very user friendly.
Deephika, they can use Power BI also.
Yes, Power BI also we can use. Yeah, in Power BI, Tableau and IDEA. So these 3 are also tools which we can use for regression. So yes, how do you know exactly which area? Yes, so as I told you, for each index, we can see which is the area in which I'm having an exception and basis which we can go further and analyze. So yes, in chat box, I think there are a few questions. Can you please share email ID? Yes, I will share the email ID in the chat box itself. Then what else we have? Solvency, sorry, 1 minute.
I think just to add to what Deephika has already told you, see, most of these models are built over a period of time by, as I told you, mostly researchers. What they do is they take a lot of data from various places and they form these equations. The undercurrent of these equations are always statistical models. If we have something called regression and classification, if you're building a statistical model, or if you're working with the artificial intelligence kind of machine language kind of thing, then you look at what is called the clustering. And actually there is another small field called data mining, where you work with unknown, that is, we don't know there's a pattern, we try to work with it. And then you find there are related patterns. Now, let us say fuel consumption in a truck, and we don't know the relationship, so we take an average fuel consumption, let's say some 10 kilometers or whatever per liter. But then what happens is you may certainly find overall it's giving you 10, but there are pockets in which it's not happening. See, I'll tell you, one of the problems is in state transport, at least in this state, is the guys cut down the number of trips, but then the diesel will get left over. So what they do is they let the engine run in the bus terminus for more than an hour, which is the running time of a trip. So the diesel gets consumed, but the vehicle has never moved. So there are various ways in which you need to figure out, because telling them your consumption is normal is one thing, but telling them your trips are being cut, but diesel is getting consumed for all the trips, say X trips, but you're getting X minus Y trips. So to that extent, your revenue is lost, your passengers are not happy with you. That's where the value add comes in. So there are a lot of these models, and a lot of universities and even our own institute is having a research facility. There are a lot of these financial models. These are called financial models, statistical financial models. If you looked at your Excel, maybe even if you looked at your, what are the IRR, what are the simple formulas we use, the depreciation, they don't use the business formulae. They use the mathematical formulae, even to find a simple thing like a square root. So what we are trying to say is, it's just the next step to move from a standard current assets by current liabilities or fixed assets by sales. Just move to the next step of getting some coefficients, etc. Do we have to do it? No. Use established models. And then later on we can see, I mean, if you learn enough, then you can start building the models. Of course, it'll have your name on it. But right now we'll just use the models. I mean, that itself is a huge step from where we are to where we want to be.
So I think most of the questions I answered in the chat box itself.
Yeah, it's there. I also typed a few, 1 or 2 answers, but basically they'll have to start using it. They'll have to use it and then we become comfortable with it.
So these models, one person has asked a very relevant question, which I thought I'll tell now. So is it popular in IA on fraud investigation? Actually, maximum of these models are very popular among only fraud investigators. But considering the CARO requirement on going concern and auditors' risk on the financial reporting, we feel like now we can use it as part of IA or SA also. So we can use it for different purposes, but primarily these were for fraud investigation only.
Yeah, but there was a question which said this is more for statutory audit and not for internal audit. Internal audit is now, not
Yes.
now, it's very old actually. It's risk-based internal audit. When you're preparing your RCMs, how do you arrive at the areas which you want to look at high risk? Today, statutory audit also is risk-based, but we have moved away from risk-based now, we're going to other things. But internal audit actually is moving on to predictive analytics, not so much what we are doing now is from the past. It's more like a post-mortem. That is the, I mean, we're not looking at the future, but internal auditor is actually the person who works out the risk areas. Statutory auditor is only on the financial component. He doesn't look at the operations really. It's the internal auditor who comments on consumption, wastage, whether things could have gone better, whether the credit you're extending is right to the customers, whether your loyalty programs are working correctly, whether I mean, there's a whole lot of things like on retail trade, it's on, when we say retail also, barber is a service retail, maybe a tea shop is a product retail, they'll be 2 different models. So maybe when we said CARO, everywhere, a few of them jump to the conclusions for the statutory audit. But remember, the statutory audit will depend on the internal auditor for most of the information, including the IFC.
So can we?
Yes. I think we have answered maximum of the questions.
Yeah, we have answered all the questions, sir. What you say?
Yes.
Thank you. Thank you so much, madam. So invariably, all the speakers did very well, but we got excellent feedback from the members. You also can see that chat box. Thank you so much. I request Panaraj sir to propose a formal vote of thanks.
Well, thank you to the IASB and the SARC, sir, for the opportunity given. Thank you very much, sir.
Because of speakers like you, we are getting the excellent feedback, and we are getting the praise from the audience.
Thank you.
Last
Thank you,
10
sir.
minutes, we are getting continuous feedback, sir. It's so good.
Thank you everyone. Thank you, sir. Thank you for the opportunity, sir.
Thank you for all the participants. Thank you.
Thank
Yeah, I put Paul sir's email ID also. Some have asked for the email ID.
you. Yes.
Yeah, in the chat box I have. Yes.
Thank you.
Thank you, everyone.
With this, we come to the end of the first day of the 2 days conclave on internal audit. And I thank each one of the speakers. First, CA Rachana Daftary madam, in absentia, I don't know whether she is there. In absentia for her presentation and her time today. And also Samit Saraf sir, you have been here from the beginning. Thank you very much for your time. And our Guru, Sir Paul Jayekar sir, well, thank you very much. At this stage also, you are so
Thank you.
well and energetic to give the presentations. So very thank you very much, and your guidance. I think Deephika madam also has proved herself so well. Thank you very much, madam, for your time and your technical knowledge and in-depth analysis of the things. I thank all the four of you for the day's program, and many would have definitely gone home with much more satisfaction than what they were at the beginning of this session. So these are the after your presentation, we come to know that there are so many areas where we can explore for expanding the professional opportunities even in internal audit areas. So thank you very much, sir. Once again, I thank in absentia the chairman of the IASP, Nanda sir also, and the chairman and secretary, the office of the SIRC, and also technical support from Mr. Selva. Thank you all. Stay safe, stay home, stay healthy.
Thank you. Thank you.
Thank you.
so
Thank you,
much.
sir.
Thank you.
Thank you, sir.
Thank you.